You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310 and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 19th day of February, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. You'll also have access to the chat box so that you can ask questions and participate in the discussion. On those days that you're out of your office, away from your desktop, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during this broadcast at youtube.com/CFRN, and we archive each daily show on our YouTube channel So if you can't tune in live, you can always come back after the fact and watch the entire broadcast. If you happen to be listening to this broadcast after the fact as a podcast, if you'd like to be able to not only hear the audio, but see the videos, see the charts, everything that we're talking about during the show, just hit pause on your podcast player, point your browser to youtube.com/CFRN, and then click on the corresponding day's show that you were listening to on your podcast player, and there you'll have it, audio and video. You'll hear everything we have to say and all the charts that we're talking about during today's broadcast. So with that said, let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, and for your grace. We pray, God, for all those who are still under these severe weather conditions, with no electricity and no water and frozen windmills, and God, you know every need. We pray that your hand would move, that the storm subsides, the sun comes forth, and life returns to normal. We know we're facing a new normal these days, but we just pray for your hedge of protection over each and every one, those who are a part of the CFRN family and even those who are not. We're all your children, God. We praise you for your goodness, for your generosity. We trust you for faithfully preserving us through good times and bad times. We serve you with all that we have. We glorify you in our plans and our activities. We speak of you to others in response to your great love for us. We live for you in every thought, every word, every deed, by the power of your Spirit. You are the God of endurance and encouragement. Help us to live in harmony with each other, that together we may, with one voice, glorify you. In Jesus' name we pray. Amen. All right, guys. Happy Friday. Garrett will be joining us today at 1:15 p.m. Eastern. It's about 75 minutes from now. Let me give you the numbers from around the world. These are the cash markets, the indices as they're called. Starting here in the U.S., the Dow is up 118 points. NASDAQ is up 89. S&P 500 is up 9. And the Russell 2000 up 55. The mover and the shaker there, of course, the Russell. We talked about that this morning in the discussion group and in the live training room. The Russell is 2,000 small cap companies versus the S&P, which is 500 large cap companies. And I often refer to the Russell as our man in the street because it seems to be a little closer to the heartbeat of the world. Sometimes these large cap companies get lost up in their ivory towers, but these 2,000 small cap companies, this is the pulse of America and the world. So the Russell is currently up 2.5%. In the commodity basket, crude oil down $1.07, trading $59.45 last. That's a drop of a little over 1.5%. Gold up $7.70, trading $17.82.70 last. Silver up 44 cents, trading $27.52 last. Now that's a gain of 1.5% for silver. And I'll remind you that when the price of silver moves $1, so far today it's moved 44 cents. When it moves $1, if you hold an ounce of silver, well, you just made 44 cents. If you hold a futures contract, a $1 move in the price of silver, so silver's trading $27.52 right now. If it were to go to $28.52, a $1 move in price, the large futures contract, that's a gain of 5 $5,000 per contract traded. Pendulum swings both ways, so it's 5,000. You know, you just definitely want to be on the right side of the street. Silver is very volatile, margins are high, so when you trade silver, exercise additional caution. In the Asian markets at the close, Nikkei down 218 points. Shanghai rose 20. The Hang Seng gained 49. And in the European markets at the close, FTSE up 7, DAX up 106, the CAC up 45. That gives us a mixed day in Asia, a green day in the UK. And so far, it is a green Radio Friday here in the US of A. With that, we can go to Michael and get a recap of what happened today in the live training room. After that, I'll be back. We'll go over the concierge trade alerts, the Logic 247 alerts, and then at 1:15 p.m. Eastern, 75 minutes into the broadcast, Garrett will join us. Garrett just published a new edition of his newsletter, Observations, so we'll be covering that today, and of course, answering your questions. If you have questions, don't be shy, just type them into the chat box. The only one who actually sees what you type is myself, Michael, Valerie. Bert, if he's around. Michael, are you ready to take the charts? If not, I'll go ahead and bring up a daily chart of the S&P. Okay. So let me know when you're ready. All right. Here we go. S&P 500 Emini Futures daily chart. This green line that you see across here, that is a 38% Fibonacci price extension. And the way we arrived at that is by doing this. Most of you are probably familiar with Fibonacci retracements, but using the same 14th century math, you can also use the golden ratio to project levels into the future. You can look at them as obstacles or targets. Either one's fine because they are both. So using the Fibonacci price extension tool, okay, right here, we connect this low to this high to this low, and that gives us projections into the future, because keep in mind what you're looking at right there is the all-time historic high in the S&P 500 E-mini futures. The all-time historic closing high was put in on Monday, a day when Wall Street wasn't even open. And that's kind of a big deal. Don't know if it's happened before or not. I want to find out. So what happened is we got to that 38% Fibonacci price extension. We expect that to be potential resistance on the approach from below. And we consolidated there for 1, 2, 3, 4 trading sessions. The 5th trading session we took off. This was last Friday. Okay, this was the Monday candle. Globex opened Sunday night. The Asian market opened. The London market opened. There was just no Wall Street open. And as you can see, we had a new all-time historic closing high on a day Wall Street was closed. The following day, Tuesday, we had a bearish engulfing candle, or an outside day. And what that means is the high of this candle was higher than the previous day. The low of this candle was lower than the previous day. Bearish engulfing or outside day. As price came down, we talked about the step line. It's the little black line here. When price drops to the step line, the potential is for it to be good support. And it was. The following session, we dropped back to that 38% Fibonacci price extension, where it became good support, bounced us right back up to the step line. Following session, we opened right at the step line. We poke our head above it just a little bit, and apparently price didn't like what it saw, because it quickly dropped back down to and through that 38% Fib extension, but going into the close it bounced. And that brings us to today. This was an outside day. Today we're having an inside day. In other words, today's high is lower than yesterday's high. Today's high, lower than yesterday's high. Today's low, today's high, lower than yesterday's high. Today's low, higher than yesterday's low. There you go. You can see it right there. And Michael, it sounds like that's you.
I am here, yes.
Okie doke. So if we take out today's low and yesterday's low, then the next important area for the market to find support will be at the BBC. This is the green line. When I come back, I'll explain to you what that stands for. Bull Bear Cross, but I'll give it some context. But for now, Michael's going to take the charts, and he's going to give us a recap of everything that happened this morning in the live training room. And when he's done, I'll be back.
Okay. Let me see. Nick, it says you're in here. We got to get together this afternoon, but I have a doctor's appointment that I have to do this afternoon too, so we have to get together. And Janice and John, I need to get to with at least one of them as well. Hey, did you see right now, Dwayne? Am I showing my screen? Yeah, it's the audience looking at. Okay. Bitcoin, $1 trillion market cap. Craziness. Okay. All right. So back here. Ready. Okay. Good afternoon, everyone. Today is Friday, the 19th day of February, 2021. Right there, it says that. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, we lost 7 ticks in crude, we made 56 ticks in gold, and we made 6 ticks on the ES. Put us at plus 565 on the morning session. Let me scroll back here. Okay. Today it took 18 minutes and 3 trades to get to the goal for the day. At that point, we're up $245 a contract, and we took a total of 16 trades. So on the month now, we're at $10,890 a contract. So over 14 trading days, averaging $777 per contract per 2-hour trading day. That's on the month. We've now gone 32 out of 33 consecutive days this year of getting the goal. And on the year now, we're at $25,225. That's over 33 trading days, averaging $764 per contract per 2-hour trading day. That's on the year. This is on the month right now. Okay, so our monthly stays above our yearly. That's a good thing. Means we're having a good month. Okay, now if you have not taken the free trial, go to the home page at cfrn.net. Right here, it says free 5-day trial, no credit card required. Click on that, and it's going to bring you to this page. ematrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, once you click that confirmation link, then we know that you took the free trial, and then we'll send you all the information that you need to get into the free trial. I'm going to bump this over here to the other monitor so I can go over the actual trades that did set up. Now we'll cover the ES first. Okay. Yeah, we didn't have, I mean, we had an open house today, so we didn't have as many trades as we had been having. You know, I think we had 16 trades, something like that. Yeah, 16 trades this morning compared to something in the, you know, some number in the 20s, which is what we usually have lately. No, it's probably about 8 or 10 less than what we've been getting. Our first trade on the ES was right in here, and we picked up 2 ticks on that one. All right. And Dwayne and I were talking about how the weekly trading zone comes into play. And it was in play all morning. All morning. It was, price was just sticking to that weekly trading zone. See, it had a really hard time getting away from it. Here we had, I think that was plus 1 tick. No, that was a break even. This was a plus 1 tick. And this was plus 3 ticks to put us at plus 6. Okay, and now I was saying it was going to get up to 39.28 is what I said, and it got up to 39.27 and a quarter. It didn't quite make it to 39.28. And what I was saying then is it's probably going to work its way back down to the weekly trading zone, and once it gets there, it will probably make another shot. I mean, this was back here that I was actually saying that, and it'll probably try to get back down to the weekly trading zone and then take another shot at 39.28, which it did do. It didn't make it the second time either. And now it's looking like it wants to go down. Let me see if I can tell you where I think it wants to go down to. 39.13 right now. 39.13. It's got a pullback area at 39.1775. So it's got a pullback area right up here, and it wants to get down to here. Okay, and that pretty much goes right along with what's happening with the charts. So we'll just wait and see if it happens. Trade what's in front of you. Always trade what's in front of you. Okay. Crude oil, we just had a few trades. Sadly, one of them was a stop out, but our first trade was right in here on crude. We picked up 1 tick. The second trade was right here. We lost 8 ticks on that one. Put us at -7. Our third trade was right here. We had a break even on that. We missed that one. We missed that one, and we missed that one. And we even missed this one right here. Okay, and that made a nice run down to this level right here. Exactly down to the same level. And well, crude was, it's not that it was hard to trade, but if you were paying attention to it, it was okay. You could have gotten that one, that one, that one, and that one were pretty straightforward. This one stopped us out. This one was pretty straightforward. That one and that one, you know. I said at the beginning, you got to watch crude, because crude's one of those markets that's just kind of, you're going to take your eye off it because it's not really moving, and then it's going to give you a really nice trade setup like this one right here. And before you know it, the trade setup's over with. But we were -7 on crude this morning after a few trades. The ES, I mean, this is not the ES, this is gold. We started out, let's go back to the very beginning. We ended up missing some really nice trades here in gold right toward the beginning of the session this morning. Let's see. Okay. Started out right here. There was a long opportunity right here that went 4 ticks into profit, where you would have moved your stop to break even, and it came back down after that. That was followed up by another long opportunity right here. Another long opportunity right here that, I mean, this was a perfect bounce off the BBC right here. Everything down here in the slingshot is right. Everything up here is right. It came back down. It hit the BBC. It gave the up close. That was a perfect opportunity to get your goal for the day. I missed that trade, but we did pick up the next trade. We got 2 ticks on the next trade. Then we missed, I was going over something on the ES right here, and I missed that one, that one, that one, and that one. Any one of which would have probably gotten us to the goal for the day. But we did pick up this one, and we got 20 ticks on this move. And that put us up 22. Okay, then we missed a trade right here, which would have doubled our goal, and then some. We picked up, what did we get on this one? On this one, we picked up another 6 ticks to put us at plus 28. Then over here, I think we had a break even on that one, or maybe +1 to put us at plus 29. Then we had this one here to put us at plus 39. I missed that. We had a break even there. We had, maybe that was the +1 right there. Then from 39, we went to 54. So we had a 5 tick. I'm sorry, a 15 tick. This was the 15 tick right here, I think. But we went from 39 to 54. So we had a 15 tick win. Then we had a 10 tick win to go from 54 to 64. And then we went from 54. Wait, somewhere in here we stopped out. Here it is right here. Okay, so I think we missed 10 ticks in here. We missed recording 10 ticks because we went from 54 to 64, and I didn't record that one, I don't think. And then here we stopped out, and we lost 8 ticks, and that put us back down to 56, and that's where I ended it on the morning session. But there were some more nice trades. It was one here, and then we get into the break, and during the break, there was a trade right here that worked out just fine, and that was about it during the break. There wasn't a lot going on during the break. Now, all these lines that I drew over here were all stuff that I was telling everybody in the room this morning. I don't know if if Val got this on the video of this morning, but if she did, it'd be worth watching that video. I was talking about market structure and how you can sort of get a feel for where prices are going. And I was doing all this stuff ahead of time, drawing all these lines and telling you where things should go and where they probably will go and probably won't go, and how to take advantage of all that. Anyway, that was gold this morning. So we had a good day with gold. Okay, now let's go back here. Okay. If you have not taken the free trial with us and you want to take the free trial with us, go to the homepage at cfrn.net. And on this page, all you have to do is go down here where it says free 5-day trial, no credit card required. Click on that, and it's going to bring you to this page, eminitrainingschool.com. On this page, scroll down to here. All we ask for is your name, your email, your phone number. You can tell us the biggest trading challenge, so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click that confirmation link. Okay, if you don't click that link, we don't know that you took the free trial. So make sure you click on that. All right, now, we'll go back here to the spreadsheet one more time, really quick. If you're gonna read the spreadsheet, you gotta read all the CFTC risk disclosures down at the bottom. All right, so today, as I said, is the 19th day of February, 2021. We lost 7 on crude, maybe 56 on gold, and 6 on the ES. Put us at plus 565 on the morning session. And today it took 18 minutes and 3 trades to get to the goal for the day. At that point, we're up $245 per contract. Today we took 16 trades this morning. Actually, I think we took 17. Let me fix that. We took 1 more on the ES. We had 1 more break even. Let me write that down here in my log too. Okay, so on the month now we're at 10,890. That's over 14 trading days, averaging $777 per contract per 2-hour trading day. We have now made 32 days out of 33 so far this year. We've gotten our goal, and we're now on 8th day in a row. On the year now we're at $25,225 per contract. That is 1 contract, 2 hours per day. That's over 33 days, averaging $764 per contract per 2-hour trading day. Okay, now some of you guys might say, yeah, so what about the commissions? Because you're going to pay a lot of commissions on all those break-even trades. That is true. And if you had an $8 commission and did everything exactly the same as I did, after commissions, and that includes everything, your net profit would be $8,300 so far this month. That's 1 contract, 2 hours per day. With a $5 commission, it'd be $9,200. Okay, so I do keep track of that stuff for y'all, but no, just getting here is where you want to be. All right. And now with that, we can pass it back out to Studio A, fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
Good.
Okay. Recap of the recap.
Today it took 18 minutes and 3 trades to get to $245 per contract.
Good job. Once again.
Thank you. Thank you.
Very good job.
Yeah, it was a pretty good morning. Pretty good,
Okay.
nice, active morning.
We've got this inside day, guys, on the S&P. And our inside day is now a doji. So not enough commitment on the part of buyers to take us above yesterday's high, nor not enough commitment on the part of sellers to take us below the low of yesterday's low. And the doji itself represents indecision. So we've got an inside day, which is a doji, which means trading conditions are somewhat difficult. Now, what Michael just went over is what we do every morning for 2 hours in the live training room. This is where he teaches you our underlying methodology, strategy, the indicators, how they work, how we read them, how we place trades using our strategy and our indicators, all of that. We also provide you with around-the-clock alerts from Sunday afternoon at 6 p.m. Eastern when the Globex markets open till Friday afternoon at 5 p.m. Eastern when the Globex markets close. We provide you around-the-clock alerts so that you're able to go and practice everything that Michael has taught you. Once you learn the strategy by practicing it in your simulator on real live breathing examples of market movement, the more times you repeat the process, you go to class, you learn, alerts come out, you go to your simulator, you go to the alert channel, you read the alert, you look at your chart, you trade the alert, you keep repeating that process again and again, with the end goal being that you learn how to spot these windows of opportunity yourself. So our product is not the alerts themselves, but our product is teaching you how to find windows of opportunity without help from anybody else. Now, once you learn all that you can learn from us, you can go your merry way. However, we hope you're going to stick around. The CFRN Passport includes everything we do, everything we teach. Well, from the live room, to the indicators, to the workshops, to the one-on-one mentoring, group training, everything. Lifetime membership. You pay us one time, you're done. No recurring monthly fees, weekly, any of that. What does it cost? $5,000. To be exact, $49.97. It's a one-time fee for a lifetime membership. 9 out of 10 new traders will fail for a very simple reason. The most important is that you simply don't have anybody to teach you how to do it. If you wanted to become a plumber, you would need a plumber to teach you how to plumb. If you want to be an airline pilot, you would need someone that knows how to fly to teach you how to fly an airplane. If you want to become a doctor, you got to go to school for 10, 12 years so that you can learn the art of doctoring. But because trading has such a low barrier to entry, like with medical school, okay, you know how long that's going to take and how expensive it's going to be. But then somebody says, well, hey, check out trading. You can open an account for a couple, $3,000 and look at all the money that traders can make. And so people dive in head first without any real instruction. Now maybe you bought some kind of educational package that had some videos. Let me just say, you can never learn how to trade simply by watching someone else trade. Just like you can't learn how to swim by watching videos of somebody else swimming. You have to actually get in the pool. You got to get in the water to learn how to swim. The only way to learn how to trade is by trading. However, when you become a passport holder, when you become a lifetime member at CFRN, we're not going to throw you in the deep end of the pool where you're trading real money. You're going to park yourself in the demo account in the simulator, and you're going to start practicing every day what Michael teaches you. And as the alerts come along, you're going to trade those, you're going to learn, you're going to trade, and your goal from day one is to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you do that, once you put together 10 consecutive days in a row, our blueprint, the 24/20 blueprint, will give you the green light to go live with one contract. So, first stage, put together 10 consecutive days in a row. Stage 2, go live with one contract. Now your goal is to increase your account balance, whatever it is, by $2,000. Once you accomplish that, the blueprint will give you the green light to add a second contract. The difference between the first contract and the second contract is the first contract came out of your pocket. The second contract is underwritten with the profit you earned in the market trading one contract. You never add more than one contract at a time, and you only add additional contracts with profit you earned in the market. So the blueprint will notify you when you've traded one contract long enough, it'll say it's time to add contract number 2, number 3, number 4, number 5. Now, just because the blueprint says it's time to add another contract, if you don't have profit available in your account to add an additional contract with, then you shouldn't add the additional contract. The idea is to keep you building your account versus blowing up your account. And most people who've been around trading any length of time already know what that feels like. Time to go wire more money to Chicago. Now, by following the blueprint, I won't say you can't blow up your account, because you can, but you just have to break a lot of rules and go against the grain an awful lot in order for that to happen. Once you go live, if you have 2 days back to back where you don't reach your goal in 10 trades or less, you come out of the live account, go back into the simulator, book a one-on-one mentoring session with one of us or all of us. We'll go through your trades with you over the last few days and try to help you pinpoint whatever the issue was that prevented you from having profit available in your account to add the additional contract. Now, ego gets involved here. Number one, it's human nature to be, we want to be right. I think men suffer from this even more than women, but part of the human condition, we want to be right. How many times have you been in an argument, and even after you had a thought that made you realize that you might possibly be on the wrong side of the argument because the other person just said something that made total sense, but yet you'll keep arguing your position because you want to be right? Okay? You got to get that out of your head in trading. Yes, you want to be profitable, but the whole right and wrong scenario, you got to let go of that. So when you need help, help's available. Remember, 9 out of 10 traders fail. Number one, because they just don't have anybody to teach them how to trade. The second thing is you have to understand it's a business based on probabilities. Once you understand that, you need a definable edge. And that's what our strategy and indicators provide you with, is a definable edge. Our blueprint also helps you write your business plan and your trading plan. And most likely, if you were to interview 9 out of 10 and ask them, do you have a business plan? Do you have a trading plan? You'll get a blank stare. Huh? What's that? There are 2 very different documents, but 2 very important documents, because you're building your own trading business. You want to get to the point where you don't need help from me or Michael or a tip sheet or a website or a news. You don't need anything but a chart and price to spot windows of opportunity, places in the market where you can put on a high probability, low risk trade. So that's our goal, is to get you from wherever you are now to that point where you don't need input from anybody else about anything else to put on and take off profitable trades. Now, 9 out of 10 traders also spend most of their time and treasure trying to figure out a way to never get stopped out. Well, let me just clear the air. There's no such thing. There's no holy grail. There's no indicator, no oscillator, no algorithm, not nowhere, not no way, not no how, that can prevent you from not ever being stopped out again. When God created man, he chose not to give Adam the ability to change the past or know the future. And those 2 things are inextricably linked for eternity. So nobody knows what's going to happen next. However, as you learn how markets work, as you learn how to read our charts, our indicators, and understand our strategy, you can know with a great degree of certainty what the next high probability move is in any market in any time frame. So you can't know the future, although a lot of websites make an awful lot of promises that would lead you to believe that if you spend your money with them, They're going to teach you how to read tomorrow's headlines today. That defies the laws of science, physics, even God. So stop wasting time and treasure trying to find a way to never get stopped out. Professional traders understand that getting stopped out is as much a part of trading as breathing is a part of life. Okay? It's part and parcel. So they don't waste time and treasure trying to figure out ways not to get stopped out. When they get stopped out, they do exactly what Michael does in the room every day. They don't flinch, they don't whine, they don't make excuses. They just look for the next window of opportunity. And that right there is probably the greatest sticking point. Even a trader who has a teacher, who understands it's a business based on probabilities, who has a definable edge, a business plan, a trading plan. Sometimes those traders can still get stuck at that point of trying to figure out a way to not get stopped out. If you can get that out of your head and embrace it as just being a part of trading, now you can really move forward and start to build a real trading business. So we have two types of alerts that work hand in glove with what you learn in the room every morning. We have the Logic 247 alerts. Everything we do is based on logic. Everything we teach is completely logical, and it's fluid across all markets and all time frames. So starting Sunday night at 6 p.m. Eastern, the alert channel opens in Telegram, and the alerts start to flow, and they flow around the clock 24/7 to Friday afternoon at 5 p.m. Eastern when the markets close. The other alerts are called the Concierge Trade Alerts. That was our original alert service. That provides forward guidance for the entire session. Those don't come out around the clock. They come out shortly after the Globex Open. It's a static report, and I'm going to show you how to draw two lines in the sand and how to use those CTAs in your trading. Now, so far this week with Logic 247, we're in week 133. We've issued a total of 75 alerts, 11 never triggered, still waiting on the results of 8. So we've had 56 actionable alerts. And so far, 8 have been stopped out, not 108. Either 8 or 10. I'll let Valerie clarify that for me. 75 alerts, 11 never triggered, 8 waiting, 56 actionable. So if there's 56 actionable, 31 and 15, that would be 46. So I'm thinking the number's 10. It was 8 and now it's 10. That's exactly what it is. So let me fix that. Okay.
Sorry about that.
Oh, no problem. I just appreciate all the hard work you do doing the recap. That is such a time-consuming and nerve-wracking job. So 18% of actionable alerts have been stopped out so far this week, based on not risking more than $300 per contract, per trade, less when possible, using market structure and a 3-step method that we teach all of our traders. A typical week will see 20% stopped out. Now, if we take a look at the logic alerts for this week, this is what they look like. These are the one that we're still waiting on. Okay. Dow, S&P, NQ. Okay, this is silver. It's alert number 6,560. B stands for buy or get long, 2760. Initial target, 2762. 2-penny move in silver is $100. The initial target on each alert will always be $100. Whether it's 2 points in the S&P, 20 points in the Dow, 10 ticks in crude, 10 ticks in gold. Okay? And so potential resistance, that would be target number 2. Potential resistance, target number 3. Here's a long on crude oil, although that should say, oh no, yeah, we just rolled to the J contract, so we're on GCLJ now. So buy, initial target, potential resistance, second target, and then the final trade to target on a long trade is the weekly trading zone overhead. So we've got a weekly zone at 6085/6090. When you see the red X, that means it got stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure. Long on the Russell, 2258 to 2260. Second target, 2262. Final trade to target, 2265/2266. And I'll explain weekly trading zones when we go to the chart. Stop out on the Dow, still waiting on the S&P, still waiting, still waiting. This is a short, S short initial target, weekly trading zone. On a short, it's the weekly zone below. On a long, it's the weekly zone above. Final trade to target. Still waiting. Stop out on the NQ. Here's a short on the Russell. Now, when it says hedge, okay, what that means, because this is a long, up above, there's a short on the Dow that hasn't triggered yet. And the market has put itself in a position that if buyers come in, we're going to trigger on the long side. If sellers come in, we're going to trigger on the short side. And quite often the market gives us two-sided action, which means we'll trigger on both sides. And that's a beautiful thing about trading futures. Number one, they trade around the clock. Number two, you could be long, you could be short, even in the same hour if that's what the chart dictates. And we trade what's in front of us. Short on silver, short on gold, short on crude oil. And here's where we put out the announcement to roll crude. Here's a short on crude. When you see the Z's, okay, this was a short on the NQ down at 13,450. Price never got to 13,450, so that's a no trigger. Stop out on the Russell, no trigger on the Dow, no trigger on the S&P. Long on silver, it's crude oil, NQ, Russell, no trigger. Stop out on the Dow. A long hedge on the S&P. Entry, first target, second target, third target, final trade to target. Stop out on the Russell. Long on the Dow. No trigger on gold. Crude oil, this is when we were still in the H contract. No trigger there on crude. Short on the Russell. Short on the Dow. Short on the S&P. Short on gold. Short on the NQ. Short on the Russell. Short on the Dow. Stop out. There's the S&P. Silver. So now you know what all the little symbols mean. Stop out. No trigger. Thumbs up. Hit the target. Okay. Stop out. And I'm rolling all the way up to the beginning of the week. So we're up to February the 15th, which was Monday. This is the day that Wall Street was closed. But the global markets were functioning just fine. Long on the Russell, short on gold, short on crude, long on the NQ, short on the Russell, long on the Dow, long on the S&P. And then here's Sunday. Remember, on a typical week, most traders are waiting for Monday morning, 9:30 a.m. Eastern, for Wall Street to open. We go to work Sunday night at 6 p.m. Eastern, even when there's a Monday holiday. Silver, no trigger, no trigger. Long on the NQ, long on the Russell, long on the Dow, long on the S&P. 133, you just saw the whole week. That's every alert that came out around the clock. the Logic 247 alerts. Last week, we had a total of 57 alerts, 7 never triggered, 1 carried over. We had 50 actionable, 7 stopped out, 14%. So last week wasn't a typical week because only 14% were stopped out. The average over the last now 133 weeks is 20%. So that helps to put what I just showed you into perspective. Everything I just scrolled through for the whole week, 75 alerts, 11 never triggered, still waiting on 8, 56 actionable, 10 stopped out. Okay. Now, I mentioned another type of alert, the concierge trade alert. If you want to grab a screenshot of those, because they all fit in one screen, you can do that. Here we go. So last night, these Globex opened at 6 p.m. Eastern. The alerts came out at 6:25. You'll notice there's 2 numbers for each market, long side, short side. So now these numbers are good for the entire session. So once this is posted, we talked about this in the workshop last night. Once you understand the methodology and the strategy, you don't have to wait for the logic alert to trigger. You don't have to wait for the CTA to trigger. If you understand the strategy and how to read the indicators, as price starts climbing to this line in the sand at 39.28, you can be long for the journey up. Once this is posted, if price starts to drop towards 39.02, once the indicators give you the green light, then you can be short down to the CTA. Now, often price will march right up to the number and do an about face and head the other direction, whether it's moving up or moving down. The CTA number, that's an important price, important area, and the market has to make a decision there. The CTA numbers are based on historic price action. The Logic 247 alerts are based on current price action. When those two point you at the same important price, important area, slow down, take a good look, because you've got both historic price action and current price action showing you a high probability, low risk trade setup. Now, we've already looked at the daily chart. We'll just touch base on it one more time real quick. Okay. And I talked to you about the Fibonacci price extensions. So this 38 price has just continually returned to it, the 38% Fib price extension. Because see, once we took out this all-time historic high, and once we took out, this historic high, looking left, there's nothing to see because price had never been here before. So you can't find obstacles in your path by looking left, so you got to resort to math. The golden ratio, 14th century math, not the latest thing to come down the pipe. Been around a long time. Okay. Now, whether you're using it for retracements or extensions, it's still using that same basic math. Now, we've had a leg up this day here where we closed below the BBC. It stands for Bull Bear Cross. I said I would explain, and I will. When price crosses above that green line, we're bullish. We anticipate higher prices. Doesn't matter what time frame, doesn't matter what market. Price gets above the green line, we're looking for higher prices. Price gets below the green line, we're bearish, looking for lower prices. Doesn't matter what time frame, doesn't matter what market. It's the same. Everything we teach is fluid across all markets, all time frames. And so we had this close here on November 3rd. That was the last time we closed below the BBC, November 3rd, until this day, right here. Now you'll notice how many times we pulled back to the BBC. When price pulls back to the BBC, we expect it to be good support until proven otherwise. So we pull back, we get a bounce, we pull back, and on this day we even spiked it quite a bit. But before the session ended, buyers came in, drove it back up. We pull back again, another bounce. Pull back again, another bounce. Pull back again, another bounce. This pullback, this is the day that we closed below the BBC, first time since November 4th. This was January 27th. So we spent a lot of time climbing. At the time, when this was the all-time historic high, this drop was the 24% Fibonacci retracement, the shallowest Fibonacci retracement. We hit it and bounced 30 points. The next session opened, we came down, we hit it again, we bounced all the way up to red and falling. Okay, the other indicator you see on my chart is called the CFMA1. I refer to it as red and falling, blue and climbing. As you can see, one's bullish, the other's bearish. When we approach red and falling from below, we expect it to be good resistance. Okay, so on this day, we ran all the way up to 38.23 half, which was red and falling. That acted as good resistance. It sent us back down below the BBC. So we closed below the BBC 1 day, 2 day, 3 day, 4 days. The fifth session, we got back above the BBC. We closed above the BBC, which led to this powerful advance. And as price hit that 38% price extension, okay, we expect it to be resistance on the way up. We actually got through it, but you'll see how the candle just straddles it. So we consolidated there for 1, 2, 3, 4 sessions. On the fifth session, we broke free, almost made it to the 50% price extension, but we did not. That's right there an indication there's weakness coming into the market. So blue and climbing is bullish when price is to the left side. Okay. Now price has gotten below blue and climbing, but it found support at the step line. Following session, we get below the step line, right back down to that same 38% Fibonacci price extension. Buyers come in, drive it up. This time over here, the step line acted as support, but as we approach from the other side, resistance, 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 3 sessions in a row. Support below us would be yesterday's low, 38.80 and a half, and then below that, the daily BBC, which is at 38.72.60. Let me refresh this chart, just make sure it's printing properly. Yep, 38.72.60. So we got potential support, of course, at today's low, then yesterday's low, and then the BBC on the daily chart. This is a high altitude look at the markets. We don't place trades off of the daily chart, but the daily chart helps us know where we're going to run into major resistance and major support. The larger the time frame, the more important the information it conveys. So we'll come off the daily chart. We'll go to a 30-minute chart of the S&P. Okay. All morning, we were watching this. And those of you that were in the room, it was a battle. Okay. Price came down to the weekly trading zone. It spiked to the BBC. Buyers came in, drove it back up to the step line. Okay. See, just like on the daily chart, on the 30-minute chart, the step line acted as resistance. So when the market finds resistance, it's going to turn around and go look for support, which it found, again, at the weekly trading zone BBC combo. Buyers come in, they drive it back up. This time we get through the step line, but we run into red and falling, which, just like on the daily, that's potentially good resistance. And it was. As we were getting ready to close the room this morning, I said pay careful attention to your chart. Because see, all morning, price was trying to either break down or break out to the upside. And it was unable to do it. And I said, watch your chart between 11:30, which is when the room closes, and noon, when the show starts, because that's also when the European markets close, 11:30 a.m. Eastern. And if the market is unable to do something, whatever it's been trying to do all morning, if it's been unable to do it, it's possible that it will happen during that 30-minute period of time. And that's exactly what happened. Okay. 11:30, actually it started at the 12 o'clock candle. Okay. Running a little late today. Came down through support. It dropped to the next weekly trading zone at 39.07. And I'm pretty sure we had a logic alert to compensate for that. And now you'll see that price, it spiked the weekly trading zone, and look where it found support. You see this bullish cross right here? That's when the blue line gets above the green line. All of our traders know that when price is dropping, when looking left, the last bullish cross that led to an extended move is most likely going to be good support the first time price comes down. And it came right down to it and caught quite a nice bounce. The low of that candle is 39.04, and then it bounced back up to 39.09. This candle opened. Sellers still have control. When we're above the BBC, we're only looking for long trades. Getting long here was difficult because we had potential resistance here and here. Sellers have now taken control because we're below the BBC. Every alert, all 6,000 and whatever alerts that are in the logic channel, are all trend trades as defined by a 30-minute chart and our BBC. Remember, above it, we're bullish, looking for higher prices. Below it, we're bearish, looking for lower prices. So we're at a spot now that we expect to be good support. If price can take out this low, then we'll have a tradable window of opportunity down here. In this area. Okay. Garrett joins us here in a few moments. I'll take a closer look at the chart, and there will be an alert that comes out in the channel. Now, we're not going to jump the gun because we expect this to be good support until proven otherwise. So what does that mean? Well, it means price has to actually trade below this low, not just by a point, not just by even 2 points. We have to see some conviction. We always make the market prove itself. Okay? Just because we expect this to be good support, we're not going to buy this. And because we're below the BBC, we wouldn't buy anyway. All right, the CTA numbers from last night for the S&P was to be long at or above 39.28. And this is exactly what I was talking about. Price goes up to the CTA, doesn't like what it finds, and then reverses. So 39.28 is right there. Mike Reed used to use the prairie dog analogy. Prairie dogs live underground. When they want to come out and do prairie dog stuff, they stick their head out, look around. If they don't like what they see, then they burrow deeper to pop up somewhere else, another time, another day. So we actually got a swing high at 39.31, so 3 points. But this forward guidance that the CTAs provide, it's not just about having a trade set up. You've got plenty of logic alerts for that. This is to give you an overall idea who has control. buyers or sellers. The short side for the CTA is 39.02, so we haven't got there yet. Now, everything that happens between these two lines in the sand is the market making up its mind. Who's more committed, buyers or sellers? If there's more buying pressure than selling pressure, price goes up. If there's more selling pressure than buying pressure, price goes down. So price has already gone up, sniffed around up here, didn't like the altitude. So now it looks like it's going to come down to if we can get through the zone. As we drop to a zone, we expect it to be good support. When we rally up to a zone, we expect it to be good resistance. Only three things happen at a zone. Consolidation is the most likely. The second most likely, in fact, consolidation, that's going to be 70-75% of the time. Rejection, that's about 20% of the time. And the slice, which if I come across, I'll show you good. There's a rejection. See how price came down to the zone, and when the 30-minute candle closed, all that was left touching the zone was the wick. So price was rejected. Okay. Now, this is a slice, and when we have a slice, that's where price slices through a zone like it's not even there. Even though we touched it once, touched it twice, this isn't the most perfect example, but I'll use it. When that move runs out of steam that sliced through, price will typically retrace right back up to the zone that it sliced through, and then continue in the direction of the slice, as it did. Sliced through, pulled back up, continued in the direction of the slice. This yellow line, that's a previous weekly zone that is still serving us well. The current weekly zones are published every Monday morning at 6:15 a.m. Eastern. We've published the zone since December 14th of 2009. And what you see them doing right now is exactly what they've done since we first started publishing them. Everything we do is based upon the underlying principle of which markets operate. So, as long as that principle never changes, then there's nothing to change with our strategy, with our indicators. We haven't changed the line of code in over 8 years. Haven't changed any rules in that long. The only thing we've done to help with the learning process is we added the alerts so that I show you a window of opportunity before it triggers, and that gives you an opportunity to go in the simulator and trade that window of opportunity, with the idea is that over time you're going to learn to spot these windows of opportunity yourself. We know this is potentially good support. It's already been proven by the bounce. So we're below the BBC, so we're only looking to find windows of opportunity that allow us to get short the market. And so we want to get through that CTA number. We need to get through that bullish cross. And so 3,900 down to 38.98. Okay, that's be the initial target. And then we've got potential support at 38.94. And then we've got potential support at 38.91. And then these lows here, previous weekly zone. The next weekly trading zone below for this week, below 39.07/08, is at 38.76/77. So as we come down to the CTA, just like up here, okay, price has to make a decision. Who's more committed, buyers or sellers? We're about to find out. Price continues to drop. You could call it, if you want to be conservative, you call it 38.99. See, let me just put it on the screen. 38.99 to 38.97 to 38.97. Then we got potential support here, 38.94. Come on. There we go. 38.94. And then we got potential support, 38.91. And when I say potential support, that's also target, 38.91. And then 38.85. And then this swing low is a previous daily low. That's very important, 38.80 and a half. We already discussed that. So we'll call it 38.81. And then the final trade to target, 38.76 slash 38.77. Okay. Now in the alert channel, and again, price may do none of this. Remember, we want the market to prove itself. And so far, all that's been proven is that this area that we expect to be good support has in fact been good support. We haven't proven anything else yet. That's why our entry is down here. So the market needs to, again, prove itself. So from 99 to 97 to 94 to 91 to 85 to 81 to 76, 77. So we'll monitor this throughout the show. If I convert this once Garrett comes on, and I'll check and see if he's here yet. Once Garrett comes on, I'll go ahead and put this in the alert channel. So it'll say, let's see, what number are we at? This will be alert number 6,564. Yeah, the next alert will be 6,564. So the alert will read sell 38.99, initial target, second target, third target, fourth target, fifth target, final trade to target. Now it won't say second target, it'll say potential support, potential support, potential support, potential support, and then it'll say WTZ. Okay, I already showed you the alerts, but that's how they look. Okay, sell, initial target, potential support, second target, final trade to target, weekly trading zone. All right, now I think Garrett comes in with a hot mic. It's still 1 minute, but let me just check and see if he's here yet. Nope, he's in the process of logging in. Okay, so we know where the CTAs are. Now look what happened when price, it came down through the bullish cross. Now that bullish cross happened at roughly 3 a.m. London open. But the CTAs from last night, those came out at 6:25 p.m. Eastern. So that would be the 1800 candle on my chart. So let's find 1800. There we go. Right there. It was during the life of this candle that the CTAs came out. So the CTA number has already triggered once in this session. Okay. 1800. This is when they came out. The first trigger was during the 8 p.m. Eastern candle. The number again was 3902, and we dropped to 38.90 and a quarter. So it's a little over 10 points. $50 a point, $500 per contract traded. The The exit signal was right here. Now, you can get out anywhere you want along the way. But the chart on an extended move actually gives us the step line. As the price is dropping, you'll notice the step line is on the left side of red and falling. As the move starts to run out of steam, why? Because it came into support, right? Instead of falling, price starts to walk sideways. And with that sideways walk, this step line goes from the left side to the right side of red and falling. Once that happens, once the step line crosses, the first green candle that closes above the step line, 38.97 and a quarter, that would be the exit signal. So the CTA entry here, the exit signal on the chart here. Okay, and price is looking for direction, making up its mind. Could we stay caught in this range? Sure. I mean, let's face it, from zone to zone is 13 points. So plenty of room to trade in that area. High of the day, low of the day. Current low of the day, 38.90 and a quarter. Current high, 39.31. Plenty of room for price to maneuver. That sounds like Garrett.
Hey, you got a good ear.
Yeah, I know the sound.
I just clicked the unmute button quietly.
How you doing?
So I'm good. How you doing?
Good, buddy. Welcome to the show.
Yeah, thank you. It was funny. I was I had just a few computer things I had to deal with, and was kind of rushing to get some charts and so forth. And I heard some noise out in back, and I thought, gee, I wonder what's going on. Kind of a little bit of an overcast day today. Mm-hmm. And I look out there, and there is about 25 wild turkeys, and about 7 or 8 of them, I guess, are the males, and they're all, tails. I haven't seen that before. They got their tails all and feathers all out. They look like a Thanksgiving turkey. Yep. So they must have heard I was on here. They were looking through the window and wanted to catch your show.
Yeah, everybody wants to catch the Garrett show.
I have a good relationship with these guys. Anyway. I've got a observations issue that had some stuff in it that I thought would be kind of interesting to go over.
Let me make you the presenter. So you just need to
show my screen.
Share,
okay.
Show, okay, whatever it asks. Okay. So right now we see you're connected to go to webinar screen, so you just probably want to shrink that and then drag your chart over. And if the webinar control is getting in your way, you can always just oh, perfect.
Now, let me, I think what I'll do is move this. For me, I've got the deal over there that shows all the...
You probably know this, but if you hit F11 on your keyboard, it will make it go full screen. If you want to do that, I don't know that you do.
Oh, I was just getting I was trying to move the... the webinar thing over
just grab that by the top and you can drag it. We can't see it, but if it's in your way, you can drag it to another screen. You can drag it anywhere that it's out of your...
and it was called the Grand Delusion. So my degree of creativity is waning because I called this one the Great Delusion. But so I've got... this guy here with his electricity, and if you remember Don King, I always liked Don King because he used to say only in America, and I think what that referred to was for him was a convict being able to become rich and famous. But I use that only in America when we see all the crazy political and other things that are going on lately. This was my cover page from the last one, And I was just covering some things in here on, apparently QE is coming back in force, and so is, the zero interest rate policy, although rates look like they're getting a little upward pressure. But people, if I make what seems to be a political statement, people comment every once in a while, depending upon how they think my statement is. But I said down here, I said, this is not a political statement. It's an accurate observation. I don't really care for either party. And that's kind of my political input at the moment.
I'm finding myself leaning in that direction more and more.
Yeah, it seems like we're getting our intelligence insulted on a daily basis whenever we're getting spoken to by a politician. So that's a little tough to take every now and then, particularly if it's like, I don't mind some of these people insulting my intelligence, but if it's Maxine Waters or some of these other people, I take offense to that. Anyway, that's boring. I wanted to cover something. If I had a little bit more time, I was going to go over that, but there's some interesting things going on astrology-wise in the stock market. And I put this in the newsletter. And if you don't mind, let me just read that, and it'll probably state it, better than I will. I said, I just wanted to bring a few things to your attention that add to what I pointed out in my prior issue. I don't often comment on astrology in my newsletter. The reason is pretty simple. I know enough about financial astrology to be dangerous and not enough to be helpful. That doesn't mean that I don't respect astrology as a viable method of stock market analysis. I've been around long enough to observe the work of a few professionals who have successfully employed astrology in their analytical work for decades. If I have any questions in that area, I have some trusted sources to ask. I've been good friends with Ray Merriman for 40 years. I've known Arch Crawford probably about that length of time, and Bill Meridian does an excellent job. He's over in Austria, but he's an American. They might be back in New Jersey now, but anyway, those guys have proven knowledge in that area, and they've forgotten more about it than I'll ever know. So if I have anything that comes up in my work and I want to find out if there's anything astrology-wise that might confirm that or deny it, I'll contact one of those guys. And if it's a big deal, I might contact all three of them just to get some input. But anyway, the March 20, the bottom of last year, was like a 4-year low, because you had a low in 2016 when Trump came in. So these are typically important times, and usually those are bottoms. And obviously it was a bottom, and we saw that in a number of investment vehicles. I mentioned here, crude oil, silver, grains, and Bitcoin, and obviously the stock market. So these have all been in a bull market move. But I mentioned here, I said, these bull markets are now running into the longest planetary cycle that is in effect this year. And it's the Saturn-Uranus cycle, and we're in the quarter phase of that. It's a 45-year cycle, so a quarter phase is 11.25 years. It's got 3 passages this year. One of them hit 2 days ago on the 17th. And then I think there's one June 14th and another one in December. Mm-hmm. I received an email from Arch Crawford about a week ago, and he stated that February 11th of this year, about a week ago, was perhaps the most important astro date in all of history. So I'm thinking, well, that's impressive. I have no idea what that means, but in all of history, that's what caught my attention. That's a big time comment. He says this is because there were the most planets in the smallest Earth sky area ever. So in other words, from our perspective out there in the cosmos, there were more planets in one area than ever before. And I got to thinking about harmonic convergence. which is what happened in 1987 when a number of the planets lined up. And on August 25th, the market topped. And 5-6 weeks later, whatever it was, on October 2nd, the market topped again and then crashed and lost, from that time, from the top in August 25th of 87 to the low, the Dow lost about 41% in a hurry. So these are pretty meaningful times. And I was, being kind of a numbers guy, I thought, well, let's see, this is a quarter cycle. It's 11.25 years. I know there's lots of things that happen over 11-year period. So I go back, 11 years, and where are we? We're 2009, market bottom. And then I took 2 periods, which would be 22 and a half years. And lo and behold, you're back there at the 2000 period. And then if you take 3 periods back, you're back in 1987. So I thought, wow, this is potentially a big deal, because each one of those times, you've got a market bottom in 2009, and you've got a major market .com bubble top in 2000, and then the flash crash in 1987. So they're all historic, and here we are again. And this one, I believe, is the strongest one this year. Arch mentioned that there were 5 planets, plus the sun and the moon and one of the largest asteroids, all in one zodiacal sign, one sign of the zodiac that takes up about 30 degrees on a 360-degree, zodiac circle. So he mentions that this is a major, major event, and didn't remember seeing anything like this ever happened before. So those type of things get my attention. And he, to Archie's credit, he didn't go out and make any prediction about it. His prediction was, this is a big deal, and expect something big to happen. So as I look at the market, we're made a new all-time high. So if anything was going to happen, generally something like this is probably going to be a reversal. Whatever happens to create that, who knows? But it's a likely place for a reversal. And of course, this market, somebody, bought the ticket that assures that the market will never go down. And the Fed has decided to create, I think I heard somebody say, and I don't know whether it's a week or a month, but it almost doesn't matter because the number's so incredible. They're going to throw, I think the comment was $250 billion if necessary on a weekly basis. And I'm like, oh, really? Wow. You guys have got a lot of money. And then I went, oh, wait a minute. That's not your money, is it? It's our money. So you're willing to spend our money without bothering to ask any of us whether we think that's a good idea. I would have told you 20 years ago that it's a bad idea. But anyway, I didn't get the call. What I wanted to show
you were
here.
probably just out of the office at the time.
I must have been gone. But yeah, I mean, this is ridiculous. You don't buy your way out of recessions. Mr. Obama would argue that and win the argument, because when he came into office, I don't know. I am sure that the powers that be, being the Federal Reserve and the deep state, of course, pretty much do what they want ever since they were created in 1913, and the longer they've been around, the more freedom they've taken for themselves.
But for anyone who doesn't know the history of the Federal Reserve, and I know that most of our regular audience does, there's a book, The Train to Jekyll Island, and it explains how the creation of the Federal Reserve, how it came into being, how much power it has, and for a lot of people, it'll be a real eye-opener when they realize that the Federal Reserve is not a government agency, not a federal government agency, not any kind of government. It is a private corporation.
Yeah, it's a
Starbucks.
private club of very rich guys who desire one thing, and that is they believe that they're much smarter than the rest of us, and therefore they should control all of us. And that's been prior to the Federal Reserve. That was their belief and their motivation. And since then, the Federal Reserve is only one vehicle, our central bank, but they have created central banks around the world. And as Rothschild said, you know, you don't have to be king and control the country. All you have to do is control their money. You know, so if I can control the money, basically he can control everybody, because you can take a little bit of that money.
You get your hand in somebody's pocket. You know, there's an old saying, you got them by the, but instead of that word, I'll say
you got them by their pocket.
You got them by the bills, not the other word. You know, the dollar
Yes.
bills that are in their pocket. I learned many years ago when it came to my employees that if I couldn't somehow get their attention with memos and meetings and all the other stuff, whatever it was I was trying to motivate them to do or not do, if I could somehow connect that desire to their pocketbook, I could get them to do whatever it was I wanted them to do or not do. Because if it was going to take money out of their pocket or put money in their pocket, it was like a puppet on a string. Now, of course, I tried to never use that power in an evil way. I used it only for the forces of good. But wow, what a powerful lesson that was. All the begging and pleading, you know, meant nothing.
Just imagine if you weren't the good guy that you are and you had evil intentions.
Yeah. I mean,
Imagine the other thing, you know, controlling somebody's money. That's the one thing. When you have people that are have the desire for ultimate control, which these people have, they find that there are other ways that are effective too. And if you read Rules for Radicals, you'll find, health. You know, if you control people's health right next to money, you're going to have them doing what you want them to do. And that's why
time and
I
treasure.
believe,
There you go, right
yeah,
there. You
Hillary
said it.
Clinton,
Time
you know,
and
wanted
treasure.
to have,
And
yeah,
only one of those is a renewable resource, treasure. Time is not.
right. Yeah, and you know, Hillary Clinton wanted to get the health care bill, and it was, you know, I thought, why are they so motivated? We've got good health care. The country's got good health care. We don't need why take, you know, I've noticed that when things are running just fine, that's great, but then the government wants to get involved, and all of a sudden, as soon as the government gets involved, nothing runs right. You know, the post office can't make anything they touch turns to something less than what it was, I guess, is a nice way to, I had a different word in mind. This is the S&P 500 cash index that we're looking at, and I wanted to point out what I call the magic line. And that magic line is this little white line here that you see. And the way I came up, and the reason it's a magic line is that if you notice, let me tell you how I got this line to pop up on my chart and why. I looked at I think it's the June 8th high here and the September 2nd high here. I connected those 2 points because they were obvious highs from the low back here all the way over to here. The two most obvious highs would be those two. So I connected that line. Lots of times when you do that, you'll determine a price angle that the market, for whatever reason, wants to be on until it changes its mind. So I took that and then I paralleled it off this low, not this low, because this was the external low. In other words, if I go on this low, I'm going to encompass that one. Whereas if I take this one, the same cannot be said. So this is the proper place to put it. I put it there. And then I noticed a little bit after this time, we came down and touched it, and bounced off it, and came down and touched it, and bounced through it, and came back and touched it, and bounced below it, and, you know, on and on. And I thought, wow. And then as time went on, I just marveled at this. 2 days ago, the market closed on this line, and many it's from this point here, this line has just been a magnet for price. Oh yeah, it got above it a little bit here, but immediately gets back to it. And here, gosh, it fell further away from it than any other point from this point going forward, but immediately within a matter of a week was back touching the line. Here it jumped up away from it, but came right back down because, I guess it was uncomfortable being so far away from the line. Here we have, ABC correction and again, back up to the line. And where are we now? On the line. So this line has a magical quality to it until it doesn't. And it's had it, I would say, arguably from this point. But isn't it true that if we went back in time, here we are here, and while we got away from it to a greater degree than any of these other times right here, in fact, within a week, we were back down to the line. And we tried to get away from it again and came back to the line. And then we got very, very vigilant and said, okay, we're going to fight and we're going to just keep away from this line and we're going to keep away from it and we're going to get further away from it. We finally get up to this point. But it was too much, and now you get back to it in a hurry, and then you stay on it. So arguably, I extended this line back to here, and I thought, son of a gun, it just keeps attracting price, no matter what. And now it's not just a matter of whatever this is, 5 months or whatever. Now it's the better part of a year, and frankly, I said, you know what? Let's just start at this low in March. And see if that line has, of course, the line, it doesn't exist at that point, but that's the whole thing about price angles. What happens? You zoom out of this point, which is way away from the line that, of course, hadn't been drawn yet, but you rip right back to it in a matter of 2 or 3 days. And now you're on that line, and now you've stayed on it until right now. That's a year. We're pushing a year on this thing. So for whatever reason, this price angle has a whole lot of validity. Right now, it's probably got more validity than anything else, and something pretty meaningful. It's going to take something pretty meaningful to break price away from this line. Once, object set in motion remains in motion. And now, so what does that mean? Do we have anything meaningful to do that? And to my knowledge, the answer would be no. But Arch and Ray Merriman, and I would imagine Bill Cerubi, Bill Meridian, and people like this who are aware of this, they're saying something major's coming up. Don't know when it's coming up.
There's a lot of talk out on the internet and places about, I think it's March 4th, all of the QAnon followers, I think that's the date that they're continually talking about. And I'm not sure exactly what's supposed to happen on March 4th, whether, I think some of them say that's the day that Trump's going to resume the presidency, that, it's all going to hit the fan and he's going to be in power again. And trust me, I don't put a lot, because I know the history of QAnon. I know who QAnon really is. It's not a secret anymore, but some people don't want to believe the truth even when it's presented. But anyway, what happened in the Capitol building the day of the riot and all of that, that was a big event. And the fact that our Capitol is still, like an occupied, there's a standing army at our Capitol. I mean, this has not been the case in all of history. What was supposed to be, our house, Joe Biden's house, the people's house, the White House. What's going on?
It would, it's a good question. The two opposing factors, if I were to mention that, 90% of Americans would say, oh, that would be Republicans and Democrats. And I'd go, no, that's not what I'm referring to. Republicans and Democrats, in my view, are there basically for our entertainment, and I'm not particularly entertained, but what I mean by that is the news channels. They're talking about the Republicans and Democrats all the time. One channel, in the past, we had fairly unbiased news, particularly if you want to compare it to current times. In the past, you had whether it was Walter Cronkite or any of these people that you go back, I'm sure they had their biases, but they kept them from the public. They made an effort to be fair, and they made an effort to report the news. In other words, an event happened, well, we're going to talk about it. Well, gee, it's a fire, it's an earthquake, something happens, there's the event. That's all changed, and it's changed subtly, and it's done it over a period of time, but people don't realize that, and we've talked about it before, but they do not realize that we are no longer getting the news. And of course, everybody you talk to will argue with you and say, well, I turn on the TV and there it is. I said, yeah, there it is. I said, that's not the news though. I said, and I can prove that to you because there's some major things that are happening that you're not going to hear about. Or you're going to hear about them and something's going to overshadow something else that really shouldn't get that attention. I'll give you an example today. What's the big news that's going on? Well, it's Cuomo. And they're starting to find out that, gee, nobody seems to tell the truth anymore. They always soft sell everything. But if I had parents that were in nursing homes at that time in New York, and that happened, but the thought is that he may personally be responsible by the actions that he took for the death of a whole lot of nice people's parents.
And they gave him an Emmy for it.
Oh, I mean, just wait till Nobel Prize comes out. I mean, there's another thing. The Nobel Prize used to have respect. I mean, Albert Einstein, you'd have some people that were worthy. And now it's it's nothing more than a political device for the most part. I mean, they might give a couple out to deserving people, but much of it is politically driven. And that's what's going on with the news. We're not getting, the example I was going to give you, Cuomo. Well, this is a big deal. What are we talking about? We're talking about life and death. Well, many, a whole bunch of people who otherwise almost undoubtedly would not have died. And what is the news that has overshadowed that on certain channels? Let's spit it out, CNN, okay? Mm-hmm. What is that news? Well, it's something even apparently much worse than dead people, people losing their lives. Significantly worse, at least in the eyes of CNN, and that would be the fact that Mr. Cruz from Texas went on vacation.
Right.
End of story.
Right.
Ted Cruz took a vacation. Period. And why is that such a big deal? Because he went to Cancun, where apparently the sun shines, and he left from Texas, where apparently it doesn't.
Now,
at least at the moment.
If he had stayed in Texas, because of the weather conditions, he would have most likely been confined to his home. He might have been able to get to his office. But more than likely, he'd have been confined to his home like everyone else. And so his ability to fulfill his duties, and this is just my opinion, this isn't news, this is my opinion, his ability to serve his constituents in this new virtual world in which we live are just as strong from Cancun as they are from Elm Street or wherever it is he lives, whatever street he lives on in Texas. So, maybe, as he has said, probably wasn't the best idea that I did that. But, I mean, he said, I was trying to be a dad, I've got a family, I've got kids, it's pretty cold here. And I have the ability, with money I earned, to take them someplace where it's warm and, they can weather the storm away from the storm. It's not like he wasn't able to still do his job, from Cancun or wherever he went.
You know what I'd love to do with the CNN reporter and a major one? I'd say, well, why don't we analyze this? Let's just make it real simple. I said, do you suppose that anybody who had a vacation coming up that they could take that lived in Texas would want to do this, or would it just be Ted Cruz? My guess is that anybody who wanted to go on a vacation and could, and it was convenient and conducive to do so, they would have figured it a wonderful time to do it. I mean, and by the way, would I be impacting anything by choosing to go on the vacation now? Well, no, we're covered with snow. The whole state, the whole city and the surrounding area are essentially stopped. So it's an ideal time. Number two, and point number three, I'd like to ask CNN. I said, let me ask you this. I said, I'm assuming that the implication that you're trying to pass out to your listeners and viewers is very simple. Obviously, if Ted Cruz were not have gone to Cancun and stayed in Texas, clearly the snow would melt and the sunshine would be back and the problem would be over. Is that the implication that you're wanting your viewers to hear? Because he obviously went to Cancun and the sun was shining down there. So is that what we're talking about here? And the answer, of course, is obviously not. But what it does is it shows the lunacy of even commenting on it. I say we know for sure, if Chuck Schumer or Nancy Pelosi or Maxine Waters go on vacation at this time. I mean, Pelosi goes on vacation back and forth to California whenever she feels like it.
Well,
and
when
nobody
Newsom,
even mentioned it.
when Gavin Newsom had that infamous dinner, the dinner that's been talked about more than the Last Supper, probably. If someone were to try to compare what Gavin Newsom did going to that dinner to what Cruz did with going to Mexico, that's not comparing apples to apples. Because what Gavin Newsom did by going to this dinner was he broke all the rules that he was enforcing his entire state to live under. He was telling everybody, you got to stay in your house. You can't go to the restaurants. You can't have a gathering like we did. And when you're out in public, you got to wear your mask. So now if Ted Cruz had told everybody in Texas, you cannot leave the state, you cannot leave your home, and then went to Cancun, then you could compare that to what Gavin Newsom did. But that's not the situation. That's not what happened, and it's not even a comparison. So,
but we've been lied to blatantly by these people for a long time. And my thought is, and again, I'm not trying to take political sides here, because 2/3 of the Republicans are, in my view, on the same team as the Democrats. Want some examples? Romney, McCain, who's no longer with us, but they were backing all these things. The point I wanted to make, though, is going back a while ago, we were talking about the entertainment factor of Republicans versus Democrats, because that's all that's talked on any of these channels. Doesn't matter whether it's Fox or CNN or MSNBC. That's the game. The point is, we never isolate the true criminals that are causing the problem. In fact, most Americans can't even define the terms when they're brought up. They know nothing about them because they're never covered on the news. The name that you'll hear most often is the deep state. And I guarantee you, if you go out and ask almost anybody to define the deep state, you're going to get something south of a good definition. If you move that up to the New World Order, you're going to get a much lesser definition, and so forth. But I bring this up because the battle is not Republican or Democrat or whether we're whatever we're for. The battle for mankind, all of us, regardless of our color or our nationality or our political beliefs, it doesn't matter. The basic battle is one between freedom, which all mankind wants. Every man, woman, and child inherently, via our DNA, wants freedom. So that's always the battle. The battle is, are we going in the direction of freedom, or are we going in the direction of control? Because that's your only choice. This is a planet of cycles, ups, down, and extremes. What's a cycle? It's a balance point that's in the middle, or it's constantly moving from one extreme to the other. So throughout our lifetime, throughout the lifetime of the stock market or anything else on the planet, you're always in the process of moving from one extreme to the other. The extreme that I'm talking about on one end is freedom. The extreme on the other is control. Now, certain people obviously want control over others. One of the, obviously the political people are one, but we've already learned that the people who control the money are the ones who control the politicians. So why don't we forget the politicians? They're really not important. They're just, they're not, like targeting Trump is ridiculous. Targeting Biden is ridiculous. Why don't we target who controls those people and find out who those people are? And we've been told about this. We've been told about it for a long time. We've been told about it by presidents. The first president to really come out and make comments about people being in control other than the president, which is his obvious referral, was President Eisenhower. And in his farewell address, go to Google, Google it, listen to what he says. Talks about the military-industrial complex and other things. 3 months later, a president of the other party, John F. Kennedy, who was just in office, he comes out and talks about secret societies. These are the people who own and control the politicians, and they're the people. Now, are they seeking freedom for us? Because if they are, then they're heroes. They're like the founding fathers. They're people we should love and admire. Jesus, who are the great people that really, really want the rest of us to have freedom. They're people like Jesus and Buddha and the founding fathers. Well, gee, are they people like Bill Gates? Well, I don't know. How many people who make billions of dollars would stop what they're doing and put 100% of their focus on vaccines and then go out and test them around the world and have some really seriously bad results, but still focus on vaccines? Vaccines falls into that health area. What's that health area? Well, it's the second level of control after, financial control.
Right.
But, why are we even talking about that? Obviously, that's just a coincidence. So, really? Anyway, let's talk about the market because, we don't have any control over the other thing. These people control the market too. So what I wanted to show you here is can you see this? Okay.
Oh, yeah. See it good.
This is a real different chart because it looks crazy, and how can we ever make any sense out of something?
Decline line, New York Stock Exchange advanced decline line, daily chart, correct?
Yes, it is. And underneath this, the chart we were just looking at with the magic line is that line right here.
Gotcha.
And it's derived from this line. So I got that underneath so we can refer to it. But if you go up top, this is a 10/30 AD line. What that means is that the fast line, which is the red line, is a 10 period moving average of the advanced decline line. The lesser wild line, the more smooth line, is the 30-day moving average of the advanced decline line. And why use advanced declines? And you use advanced declines because that's what the market's doing. And when you have more advances in one day and more declines, it should have something to do with ups and downs. It doesn't always, because if you're having more declines in one day than advances in the market up, it just means that your larger capitalized stocks are the ones going up and the smaller ones are falling off. And if that's what happens, maybe you're getting near a top. But here's what I saw on this chart. I'm kind of visual, so I'll sometimes look at a chart and see where a trend line might go, and other times I'll look at something like this, which just looks crazy. Looks like lines all over the place that don't mean anything, but my eye will pick up on something. And I just happened to be looking at this the other day, and I thought, boy, look at this. We're up here, and this one's up here, and This one's up here. This one's up here. You know, I wonder, you know, are these near tops? You know, that looks like it. That looks like it. This looks like it. Then I looked over here in February and I thought, yeah, look at that. You know, at the time, we when I first started looking at this, we were actually down here. We had moved away from the, you know, from the 30 period, but the 10 period. And I thought we'd done that over here too, kind of a similar thing. And then we run up real fast and break through this thing and got up there and made a peak. And then I looked and I thought, whoa, this is close to this top. This is a major top. This is a top a year ago when everything was fine. Trump was president. Half the people were very happy with it, but the economy was doing great. There was less unemployment than there had maybe ever been, and all sorts of things were doing well. An election was coming up, so maybe something had to happen to change that. And what happened was COVID, and it happened right here. But now we're over here, and I looked at this, so I went back, and I went back from here, and I thought, gee, what happens when you go back here? And I thought, well, you got this goofy little consolidation before this collapse and after this rise. So I go over here, and by the way, this should be like this, and why it isn't, that's the way it originally was. I don't know why that changed, but that's the way it should be.
Ghost in the machine.
Yeah. They knew I was going to be on the air. They just trying to embarrass me.
Just messing with you.
Anyway, so now that I'm embarrassed, this right down here on the part of the ellipse here, right down here, makes it a little easier to see, and that's what I wanted to do. So they're very similar. This part's very similar. If we go left, here's a little up, down, up, down, up, down. Look at that. Here's a little up, down, up, down, up, down. And then it quickly goes down here. This one quickly goes down here. And if we go in the other direction, we don't have to go very far. And we've got a wave 2 here, a point 2. Let's label that. We'll go backwards. We'll label this 5. This one's different. This is 4. This is kind of crazy before it goes down. This is 3. This has got to be 2. That's got to be 2. So where's 1? Well, we trace this thing backwards and we go up here. There's 1. That's the highest point from there. And here's 1 over here. So I thought, wow. I said, that looks pretty similar. And let's see, your 1 here is during a period when you're essentially going up on the blue line. It's come up here, it's come down. There's a little bit of a wiggle coming down here. You've got this wiggle coming down here. And then this one is a little bit more violent, but it's on its way down to making a, from this point, 5 waves down, 1, 2, 3, 4, 5 to making that low. And over here, where are we? Down here, 1, 2, 3, 4, 5 to making this low. So while they don't look identical, they're definitely similar. And their patterns, if you just take the pattern and draw straight lines here, straight line down, up, down, now you're real similar. So let's see if there's anything beneath the market from this time period that looks similar. So if you come down here, you go, well, it's roughly down here, and we're on this crazy line that I've been talking about. And throughout this whole time of these ups and downs, there were downs and ups, I guess I should say, down, up, down. You're basically staying on the line. Here's this point here. Here it is here. And granted, at this point 4, we have what looks like a little ABC decline away from this line. I mean, if I blow it up, it'll look bigger, but for the most part, you're on the line. And even with this huge move back up, all you're doing is getting up to the line and staying on it. So definitely, that's crazy. This is violent all over the place. This is not violent except for here. So obviously that won't be the same over here because this doesn't make any sense. So we go over here and look and we go, well, here we are. We drop down. We're coming up from a little low over here. Here we're coming up from a little low over here. Then we come up and you're hugging this line. And lo and behold, you get these ups and downs, but you're just hugging this line. And then at this point 4 is the only time you really pull away from it with a little ABC. And then you come back up to the line again. Over here, you got a little ABC. And then you come back to the line again. And you go, well, that's darn near identical. That's as close as you're going to get. And, oh, how did this line happen? Did I just draw that trend line in there? Well, yeah, that would be the smart way to do it. And you're catching this low and you're going through this low and you're catching these lows. Yeah, that's the way you draw it, but that's not what I did. Actually, what I did was something like this. I don't want to lose my line here, but let me just make my point so that we know I'm not a storyteller. Look at that. That's the line. I just pulled the same line over and it lays right across it because it's the same line. This price angle that I've been talking about, that's been happening for a year, why does this price angle happen? My answer is I have no clue. I couldn't begin to tell you, but I know that it did happen, and that my being, like I say, kind of visual, spotted this. And I looked at this over here, and I just dragged it over. This is the same line. This is identical to this line. This price angle of ascent here, which again, if we blow up the chart, will, look like the chart that we just saw. This is identical. The pattern's identical. The line is identical. We've come off this ABC4 and come up here. When this line moves down, let's look at another thing. And this is the most remarkable. These things are called analogs. This is the most remarkable analog I've ever seen. And I've seen some that, make your socks go up and down. So let's take this point right there. I'm taking number 5 high, which is apparently on September 14th, it looks like, if I'm on there, 13th or 14th. Where is it? Well, it's right here. It's pretty much on the line, and you got about a week or so to go to get to this point. And then the market breaks down. And what's this point? Why is this green line here? Oh, that's where this red line actually reverses and comes down through the blue line. And somehow when it goes through the blue line here, let's draw my line over here. There it is. And where is that? It's right on this green line, and it's just before falling off the cliff here. Well, that's probably worthwhile. Let's go over here and see what's going on. There's the peak right there. And that's before the top. It's right here. And this is just coming down here right now. So we're just, as of yesterday, we're right there. This point here, this point there. And where's that? Well, that's right where the market topped. You can see it. That's where the top was made. And that's where the top was made here. So it looks like we're a little bit after the top. Now, what should happen, particularly if something big is going to happen, I'm going back to the astrology thing. If something big happens over the weekend, and believe me, I don't know what it is. I don't know if it's the military in Washington or the snow in Texas. I don't know. But assuming something happens pretty soon, doesn't have to be over the weekend. If it happens and it's negative, you're probably going to get this. Here it was COVID. That was a pretty big deal. Well, we've already got COVID over here, so it's probably got to be something else. But if this is going to be true to form and go through, you're probably going to get something like this going on, and it's set up for that. Now, does that guarantee it? Unfortunately not. What can get in the way? $250 billion a week from the Fed, for one thing. That could get in the way. Another thing is, if we look over here, I mean, here's a high. And by the way, the other similarities that I wanted to point out is this number 1 here, similar height is number 5. In other words, 5 comes up kind of where near 1 is. And what happens here? 5 comes up kind of near where 1 is. So, I mean, this thing, and if you keep looking at it, there'll be more similarities. It's remarkable. However, I would point out that, well, this looks like we're about ready to jump off the cliff, and this is probably a great time to sell the house and buy out of the money call options. That's crazy. Don't do it. but you know, I mean, that's the kind of thing that goes through your mind. But if we come back over here, here's a more arguably overbought time. Here's a peak, just like before. And this is a pretty good correction. Doesn't look like it, but it's 200 S&P points. That's pretty good, pretty big deal. But look at this.
Same as 2,000 Dow points.
Yeah. And right here, look at this. You're the same. This turns down. Here, it's like here. You're coming over. You want to see both these lines going down. Now, when they're going up, you can be pretty sure the market's going up. When they're both going down, you're probably going down. But look at this. Here you've come down. It looks just like where we are now. But what happens? It pops up a little bit. Well, you know, let's see. Let's be accurate here. What happens there? You come down and you rally up here, and then you come down again. But you don't get this. You're not getting this. You're getting a decline. But it actually turned and went up from here. And during this decline, you didn't get that much of a decline. In other words, here's where that is, and that you know, you haven't even. In fact, here this line has gone down, and the market didn't even go down. It's right in here, so it's different than what happened over here. So, in this time, this Saturn-Uranus, one of the things about that is that nothing goes as expected. That's kind of the, you know, what would be the verbal psychological definition of this astrological configuration. And the answer to that is don't ask Garrett, because he doesn't know that stuff. But the guys who do know it, say that this is the when Uranus is in the picture, it's a time things don't go as expected, you know. So my thing is, I don't have any expectations here. I'm just looking at this, and maybe, what does that mean? Things don't go as expected. What that might mean is, what's everybody expecting right now? Everybody's expecting the market to go up. How do I know that? Well, it's, what is it, 2 days off an all-time high or something? We're days away from an all-time high, and we're not very far away from that all-time high right now. So people sure as heck aren't bearish. I know that. I know that when they do the analysis of money managers, and I forget the group, the one group that I'm referring to, but they have the universe of money managers, and in that group, they will take the most bearish money manager at a time like this and see how he is positioned. And the most bearish money manager during the last time they did a reading recently was 75% invested in the market. So here's the most bearish guy in the whole universe of that universe of money managers, and he's 75% long. That's not very bearish, is it? And that's the most bearish guy. So what it's saying is, you know, the ball's going on, the music's blaring, everybody's dancing. In fact, everybody's on the dance floor. Nobody's sitting down. In other words, nobody's sitting there with their cash waiting to go in. Everybody's in. This is an all-in deal. People are in the market, and by the way, they're leveraged. A decent portion of them are leveraged. So everybody's all in. Everybody's bullish. Everybody on TV is talking about the stimulus. That's, you know, if you're not talking about Ted Cruz going to Cancun, you're talking about the stimulus. Yeah. So it's bullish. So the surprise would be, or the things not going according to expectations, would probably be a reversal. And the only question is when. But it certainly looks set up. And if you look at other things. Well, by the way, what's this? Here's the 27-minute futures. They're kind of rolling over and now bouncing off here. But I was going to look at something else. Let's see what we've got. This, if we look at, here's our line. Let's go here. You know what? One more. This is the daily, just to see what's happened. We got a buy right here, and the market's gone up. The relative strength has gone up and flattened. My indicator's gone up and essentially been flat for at least the last week and rolling over, but price is still hugging this line. And here we are. Here's your top, 1, 2, 3 days ago, but we're still hugging this line. So if something's going to happen, that's exciting, but it hasn't happened yet. The other thing I wanted to show you, just a couple of things, just to put these things kind of in big picture perspective. Let's pull this back into, this is just insane. I mean, here's 2016, 4-year low, 2020, 4-year low. So this says, gosh, we're going to go up. You know, it's a 4-year low. Well, boom, there it is. We've gone up. Look at this volatility. January 18th, that, you know, boom, 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 boom. We've got this expanding triangle. And this part here, which is last February, what we're talking about, when you look at this, this is just extreme. This is ridiculous. This is, here's your lows. They're in a nice trend line down here. But your high here, this was the most overbought market since 2000. Here you go higher and then have this collapse into Christmas of a couple of years ago. And look at this. Now you come back here. This was just ridiculous. This was one of those moves. It was absolutely ridiculous. Just before the COVID happened, the only thing that was making it happen was the economy was good and Trump was doing a good job and everything was fine and unemployment levels were very low. But look at the angle on this thing. This is crazy. And finally, when this happens, you go, yeah, whether it's COVID or whatever, this is crazy. It doesn't deserve to be here. That's the craziest thing you've ever seen. And you get a sharp and horrid decline because this is so ridiculous. Now, the only thing more ridiculous on this chart from here to here is this one from here to here. Here's what's ridiculous about it. At this point, regardless of the debt and all the other negatives that are always there late in the cycle, at this point here, you've got pretty much full employment. You've got a bustling economy, and you got all sorts of things going on that are positive economy-wise. COVID comes in, and boom, now you've got 30% less people working, huge unemployment, greatest unemployment since the Depression. So you've got a 180-degree reversal from this. And this has happened here. And you go, oh, well, gosh, everybody must have gone back to work. Nobody's home. Everybody's back to work. The kids are at school. The economy's better than it was here. And by the way, materially better, obviously. The Civil War atmosphere that was going on psychologically in the country, where half the country hated the other half, obviously that's not happening. And Trump, or somebody better than Trump in economics, must be at the president here, because there was election down here, somewhere in here. So that must be what's going on, right? I mean, that's what this chart says. Mm-hmm. Obviously, things are better. Yeah. Well, you know, something's wrong because things aren't better. The debt is significantly greater than it was here, and it was horrible here. The unemployment is not only, this was the best unemployment, maybe unemployment readings ever, the lowest. Now they're the highest other than during the Great Depression. Lots of people aren't going to go back to work because they don't have any businesses anymore. Lots of people are dead. Lots of families are separated. through divorce and just through the horrible things that are created by COVID and people being put out of work unfairly and all sorts of things. I mean, the negatives here compared to here are just monumental. They're not even, you don't even make these kind of comparisons. You know, it's like comparing, you know, a 7-foot all-star center with, you know, a fifth grader who doesn't play basketball. I mean, they're night and day. This is not a reasonable comparison, but look what's happened. This is crazy. This trajectory line here was crazy. How do I know that? Well, this proves it. That's what happened. And crazy, this one proves it pretty much, and this one certainly proves it. See, that are beyond my ability. And granted, I fall in, you know, if you go back to 1929, which is what this compares with, Bernard Baruch sold out a year before, in I believe the summer of 1928, and all the 20-year-old traders were saying, you know, too hot in the kitchen for Bernie, old Bernie, you know, he's beyond his time, man. This is a young man's game, and they're probably right. But the difference is that we know Bernard Baruch's name 90 years later. Name me one of those kids that was talking then. Can't do it. Nobody can. We got the same thing now. We got 20-year-old kids at Robinhood trading and people much older than that buying into this situation, which is an accident waiting to happen. And the newscasters are doing the same thing that they did in 2000 and the same thing they did in 1929. Everybody's bullish, and anybody who's not bullish isn't very smart. And that's easily proven, because the guys that are bullish right now are making more money. And the guys that have been around a little bit and are wise enough to see risk and attempt to do something about it, as I said before, aren't very smart, at least at the moment. So anyway, there's where we are. The other chart, you know, this to me is just absolutely crazy. But again, I'm apparently a relic compared to these 29-year-old guys, and you know, I mean, I get it. I mean, I'm not arguing that point. They're right as long as they're right. I've been through this before. I was through this here and uncomfortable. And I was here on record actually July 19th, came out with an observations and said, this looks like the market top. Didn't sound like it was particularly concerned. A little bit later, people got real concerned. Same thing over here. And this, you know, but again, tops take a long time to form. And this one in the NASDAQ was an 83.5% correction, more like a 50%er here. Mm-hmm. But same thing. I was there in 1987. This looks like nothing, by the way. Can you see this? Where in 1987? This looks like nothing. That's 41. That's 41%. You need to do this on a logarithmic basis.
That's the big one you've heard about. You know, after the Great Depression, you heard about Black Monday.
Yeah, by the way, this drop here, right here, is the same as this one right here. They're the same. If I do a logarithmic scale chart, you'll see the same drop. So it's crazy. This looks like nothing. There was a conference in San Francisco put on by ISI, Investment Seminars Incorporated, in the middle of August, and in San Francisco, and I was speaking at that conference, and Richard Russell,
a city on edge,
who's since passed away, was the author of Dow Theory Letters, which was a great letter, just a really well-written, enjoyable read all the time. And he had the longest-standing newsletter ever. He started it in 1958, and this was 87, so he was well known and so forth. And the only two bears at that conference were Dick Russell and myself. Bob Prechter was there. Bob Prechter's been a known bear, but he wasn't a bear. He wasn't a
Oh
bear
my
at
goodness,
that conference.
the one time he wasn't a bear. I mean, because he
Was
is
not a bear
he's a
there,
perma
and-
bear, or has been, yeah.
Yeah, and most of the, like I say, there were only 2 bears there at that conference, and you know, I think Russell had been around with his newsletter and pretty well respected, and I was lesser known, so I don't think they called Dick Russell an idiot, but they probably thought he temporarily lost his mind, and I didn't have the benefit of a newsletter from 1958, so I probably was the idiot. As a matter of fact, a good friend of mine, lady that I met at the conference, a real bright gal, she was listening. She said the 2 other guys sitting on either side of her said, "Oh, this guy doesn't know anything," and but she came up after I spoke to chat and was interested in what I had to say. But 2 weeks later was August 25th, harmonic convergence, and the market topped. And all of a sudden, 6 weeks later, with the market down 41.5%, I was significantly less of an idiot than I was earlier. So that felt nice. But right now, I'm still the reigning idiot, apparently.
Well, you're one of the smartest guys we know, for whatever that's worth.
But anyway, all this chart says to me is does not appear to be. Let me restate that, because I've learned to be polite about these things. Otherwise, they smack you in the head. Does not appear to be a place to take a great deal of risk on the long side of the market. Why would I make such a foolish comment?
I agree wholeheartedly.
And by the way, what is this? This is a moving average. This is a 10-month moving average, this blue line, the line inside. And this is a 15% band above that moving average, and this is 15% below. Why do I use 15%? Because it's a pretty big number to move away from a moving average is one reason. And the other reason is it does a pretty good job of defining where things get a little extended. Now, when you come off a low, you'll tend to hug that line. So if you're coming off an oversold low like this here, boom, you're gonna hug that line because you were oversold. Same thing here, oversold in 2009. You're gonna hug the line, but even early in the bull market, you'll pull away from it. And once again, you'll pull away from it. Then you run all the way up and you get another run. Again, it's a bull market. It's QE. They've got things here that they didn't have before over here. They didn't use quantitative easing. They didn't use 0 interest rates. They didn't force interest rates down to 0. Not market generated rates, but deep state let's call it spade. It's deep state generated. And why would the deep state do this? These are, again, you've got people, what's the game? Keep it simple. We're either going toward freedom or we're going toward control. Mm-hmm. And by the way, which party? Again, I don't even like to bring parties into this because, again, the parties are not helpful. 2/3 of with Trump in there, he was going toward freedom. Well, how can I say that? Why would I say that the Democrats weren't going toward freedom? Well, Trump was the guy talking about the Constitution. Trump was the guy talking about maintaining our Bill of Rights, freedom of speech. He wasn't censoring things. He was being censored. He didn't want gun control. Hey, look, I'm a liberal. People would go, what? What? You're not a liberal. I know you. I said, no, you're wrong. I said, I am a liberal. They said, well, how can you say that? And I said, oh, it's very easily. I said, I don't try to dictate other people's lives. I don't try to control other people. I said, listen, I have a hard enough time controlling myself. How could I control anybody else? So I'm kidding, I hope, but the point is this: if I don't like guns, I don't buy them. I don't buy it. If I don't like a gun, I'm not going to buy one. But you can do whatever you want. I'm not trying to keep you from doing anything, so long as you obey the law and don't hurt people. I don't care if you have a gun. But if I'm a liberal, then I want laws passed where you can't have a gun. I don't like guns, and you shouldn't like them either.
But I can surround myself with an army. All of these people that don't want you to have guns are, by and large, people who tend to have armed security details that follow them around wherever they go.
Oh no! Don't say that. You mean like Nancy Pelosi with the walls around all of her many homes?
Yeah.
You mean like that?
And I'm sure that, when she goes out to lunch somewhere, there's a nondescript guy sitting at one of those tables in that restaurant, also having lunch or pretending to have lunch, who's packing heat.
He's covering her back.
That she, is protected.
Yeah, well, we probably don't want to say that, but you don't want to. When you're talking about the quote unquote liberals, I'm the real liberal here, but when you're talking about the quote unquote liberals, you don't want to bring up, you don't want to bring up facts. I don't think they like factual things, and you don't want to do that. It makes them angry. That's another thing. Which party's angry? Which party has been angry for 4 years? The Democrats have been angry for 4 years. Well, why have they been angry? What the reason they say they've been angry is Donald Trump. Mm-hmm. I don't know if he stepped on their toes before he was president, but they're angry. They were angry at him. They were angry for 4 years.
Someone stepped into office that they could not control. Nobody had anything on him.
Well,
he didn't need their money.
Thing, though,
he did what he thought was right, what he thought was in the best interest of the American people. We may not have always liked the way he said things. He may have been, a little rough around the edges when it came to that kind of thing. Okay. I'll be the first to admit, I didn't agree with everything he said, and I certainly didn't agree with the way he said some things. But it's obvious to me that his interest was the best interest of the American people, not the old boy network. And he really upset the apple cart. I mean, they had worked really hard over the years, to put all these different people in their positions of power so that they could control everything that happened. And then along comes some guy that they couldn't control. They didn't have anything on. They couldn't blackmail him. They couldn't bribe him. He didn't need their money, so they couldn't bribe him. Guy doesn't even drink or smoke. So as much as they tried to blackmail him, they could never find anything that stuck. And not that he's never done anything wrong in his life. I'm sure he's done plenty of wrong things. I'm sure he's done things he's sorry for.
There's hardly anybody who hasn't. So they don't bring that up. But I mean, look at this. Look at what happened at the, when they had the riot, the thing that they're blaming Trump for and we're impeaching him for. They forget to play and you watch this on CNN, they never play what Trump said. When they were going to march, he said, and do this peacefully, go over there peacefully. It's exactly what he said. If you take Maxine Waters, who really wanted to impeach Trump, what about her speech in Los Angeles, where she actually told people to go out, and do stuff?
And be violent.
I mean,
oh yeah.
Be violent. I mean, she actually incentivized violence.
Oh, yeah.
Trump did the opposite. He said, be peaceful. Now, there's plenty of proof, but again, we're in a censored time period. We're seeing censorship. Why would a party? I wanted to make one other point about which party's angry, which party isn't. And by the way, I'm not a big fan of the Republicans. I just like them. I just like the Democrats a little bit less based on their actions. And their actions are: didn't Biden win this election? I don't care whether it's fair or not. We don't even need to get into that. But didn't Biden win the election? Isn't he president now?
That's
isn't that what the Democrats wanted? Mm-hmm. Do you realize that the Democrats are no less angry now than they were when Trump was in office?
Yeah.
They're still angry.
Yep.
What in the world are they angry about? I think if somebody wants to be angry, I mean, anybody. I'm not just talking about you or me or anybody else. I said, I've had my rights taken away. I don't have freedom of speech. I can't go to Berkeley, California, at the University of California, and get together a conservative platform and talk conservative things without fear of having somebody jump me. And first of all, I'll be shouted down, so I won't have a chance to say what I want to say. Right. But it can go further than that if a crowd, comes up. So I don't have that freedom. And my son or my daughter or my niece or nephew who happen to be students there, maybe, they don't have that freedom either. But if I wanted to talk radicalism, if I wanted to talk violent radicalism, I've got a free platform and nobody's going to yell me down.
If you want to talk that there's 20 some odd different genders now, you and I grew up, there was male and female, but now there's 20 different genders. I mean, if you want to talk about that, they would throw a party in your honor, there'd be chips and dip and...
Yeah, there you are. I mean, that's the thing. So, I mean, so this is...
And I don't say that from any kind of a homophobic place. Well, we talked about this on the show yesterday with Dr. Tom. What people do in the privacy of their own home, behind closed doors, that's between them and their God, right?
I don't care. For me, my feeling, again, I'm a liberal. My feeling is I don't care what you do. I do what makes you happy, so long as you're not hurting somebody else or violating somebody else's rights, you're not creating a danger. I don't care what you do. I don't want you to necessarily do whatever you're doing on the front lawn in front of small children. Mm-hmm. But it's not my business to what you're doing. And wouldn't it be nice if the Democrats said that? But what are they saying? I mean, here's the thing, and I'm trying to point this out to friends. I said, there are people on the party, and these are people that are gaining power within that party, the radical group. They want to punish people who voted for Trump. And I'm going, wait a minute, let me make sure I understand this, because I'm a little slow. Let's see, you're saying that you want to punish people for exercising their right to vote freely. Isn't that what I just heard you say? And the answer is yes. That's what they just said. And again, my whole point here, I don't care about Republican and Democrat. I do care about freedom. And you care about it, and they care about it, except they're not smart enough to know it. Somehow they've got bought into, and they're being used by the people who are driving us away from freedom. And that's the enemy. The enemy is not the Democrats. I mean, I got a lot of friends who are Democrats, and we don't agree on some of these things, but these are good people, and I'd never want any harm to come to them, even if they voted in a manner that I didn't want them to vote.
Of course.
And I say to them, why do you want harm to come to me because I didn't vote the way you voted?
Yeah.
And most of those friends will say, well, I don't want harm to come to you. I said, well, then why do you vote for someone who did and the party that did? If that's the case, I said, look, I got the same thing about Donald Trump. There's plenty of presidents. Donald Trump has to say things in a certain way. Now, he could say these things so much better. I wanted Trump to do fireside chats. I wanted him to sit down with the people, not in a suit, maybe in a shirt and a sweater, and just talk to him from the heart. Say, look, I'm a person just like you.
And I think he did that in the digital age via Twitter. I mean,
he did it via Twitter, but with Twitter, you're not sitting by the fireplace being a human being. You're not even a voice. What you are is written words that need to be read.
Right.
And when you read something like that, in other words, people can misinterpret something all day long for any reason whatsoever.
Who was the last president that did those Saturday fireside chats? Who was that?
FDR, I guess, huh?
Okay. All right.
Now, I can't remember whether JFK did something like that, but I think it's a bright thing to do. And when you got a guy like Trump, Trump's the only guy who could do what he did. So, are there other people? I liked Ron Paul. I met Ron Paul first in 1978, and for a few years there, when I'd go down to the NCMR conference in New Orleans, and November most of the time, I'd see Ron Paul and get a chance to talk to him most of the time. And there's a wonderful guy. There's an honorable man. I think even the Democrats, like, who's the guy? Bill Maher, liked him, you know, and he doesn't have very many nice things to say about Republicans. But Ron Paul was, you know, great guy, sound money guy, was a doctor, you know, just a very, very good person. And that's the guy I wanted for president. I thought he'd be great. But the problem is this with Ron Paul, and it's not just Ron, it's any other guy other than Trump. Anybody, including any Republican you want to pick now, I don't care who it is, anybody else would have been run over by this deep state machine. Again, it's seemingly all Democrats. And I don't want to say that because Tulsi Gabbard, for example, I think I'm extremely impressed with her. And I think, I don't know why she's a Democrat. I mean, she's a 1960s Democrat, a JFK Democrat, and there's nothing wrong with that. I said, if there were the 1960 Democrat coming into the race now, I'd be a Democrat. I like the 1960 Democrats better than I like the 2021 Republicans.
My wife.
So there you go. I'll be a liberal and I'll be.
I was just going to say, my wife grew up out west. Her parents were Democrats. They were a Catholic family. But she, you know, my wife is as conservative as they come these days. I mean, when I met her, she was a very liberal hippie chick dancing barefoot in Balboa Park. But today she's very, very much a staunch conservative. But she reflects back on growing up and her parents being Democrats. They were open-minded, kind of free thinkers. She said, but they absolutely resemble nothing like what is called the Democratic Party today. It's just
they were conservative. I don't even know, but I'll bet you money they were conservative.
They were.
You know, forget the party label. That label is. See, I'm a conservative and I'm a liberal. They go, what? That's like being tall and short, isn't it? How can you be tall and short? That's like being smart and dumb. How do you do that? And I said, because you people have been brainwashed. I said, why in the world? If we talk about the liberals for a moment, and let's just use that example about guns. If I don't like guns, I don't buy one. If they don't like it, they want to pass a law. If the other thing, hey, I don't like meat, shouldn't eat meat. Well, I don't buy meat then. What do they want to do? They want to make meat illegal.
Yeah.
Yep, we want to do that. It's always a law. We've got to force other people. You're taking freedom away. What do they want? They want the removal of freedom. Let's get it down to basics. Quit playing games. Quit the word games. What do Democrats want? They want to remove your freedom.
What did God give man when he created man? He gave him the freedom to choose. You can eat the apple or not eat the apple. If you don't eat the apple, life's going to be pretty good. If you eat the apple, bad stuff going to happen. But the point is that man had a choice. And life is filled with choices. And whatever world you live in today is the direct result of the choices you made yesterday. Whatever you say and do today is the building blocks of your tomorrow. If you don't like the world in which you live, and I'm not talking about the world as we know it, this globe spinning in space, I'm talking about your life. If you don't like the condition of your life today, okay, whatever condition your life is in today, if it's not comfortable, if you don't like it, and you want life to be different tomorrow, then you have to start changing the way you think, the things you say, and the things that you do. Thoughts become words, words become actions, and those are the building blocks of our tomorrow. Now, I know that, life can sometimes deal us unfortunate circumstances, and, we get rear-ended at a traffic intersection, you know, we can say, well, that's not my fault. I didn't create that. No, fair enough. Okay. But I think everybody sort of understands the point I'm getting at here. What we think, what we say, and what we do creates the life in which we live. So.
That's a fact. And, you know, the funny thing, Dwayne, just in the choice of words, I wanted to go back to that for just a second. And, but it's interesting, you know, as I say, how can you be a conservative and be a liberal? And the answer is very easy. I said, I'm one. I know you're one. You know, you're a liberal too. You're not trying to tell everybody else what to do. But isn't it funny that they got that name? You know, it's like, how did that name come about? Now, this came about in the late 60s. I remember when it was done. And this, when we say brainwashing, I really wanted to touch on this for a second. This is a brainwashing tactic. We need to create a new party. Let's go back to the 60s, because we're the problem in the 60s. If I'm part of a group that wants to take control, if I wanted to control people, and I've got big money and big power behind me, and both parties are conservative, I'm in trouble. I've got a big trouble. I've got a big problem going on. If both parties are conservatives, I can't do it. What I've got to do is I've got to create a new party, and that party has to get, it's got to get some momentum behind it. And there was no party like that. So they had to create liberals. And how did they do it? Well, they created the hippies. They already had the beatniks over in San Francisco, but they had to create a bigger group. And they had to get people away from this conservatism, because whether you were Republican or you were Democrat, you were all about God, country, motherhood, apple pie, you know? And as long as that happens, you're about freedom too. You're not about to be controlled by anybody. And Democrats would stand up for Republicans, and Republicans would stand up for Democrats, because we were Americans. We were on the same team. Republicans and Democrats were on the same team. That had to change. And how do they change that? They do it subtly. First of all, you got a war. You got to find, you have to have something to be against. Remember, it's the negativity. You need negativity. You need to be against something. Well, what was everybody against? These guys aren't stupid. This is how this happens. The negativity was the war. Well, gee, Republicans don't like the war. Democrats don't like the war. If you're a young man, you don't want to, you know, hey, gee, there's a cute little gal over there in college, and oh, I'm not going to be in college. I'm going to be wearing a uniform, dodging bullets. Well, they didn't like it either. So they started to work on that. And then they kind of were a little lax and turned the other way, because people started to smoke pot a little bit, you know, so we got a little bit of the drug culture going on. And then other drugs came in, the psychedelics came in. And while that was going on, they were working about getting, you know, we got to get to Trump. We got to make a change here. We've got to take these conservative Democrats and Republicans. We got to create a new party. So that's how they did it. They did it with the music. They did it with the drugs, and they gave them, they made them anti-establishment. My older daughter, and by the way, I'm looking out the window here. I'm surrounded by these wild turkeys. I don't know what's caused them to be here.
Call 911. I'm surrounded by wild turkeys. Send help. Yeah.
Yeah, I'm looking beyond that, and there's a deer out there. So what a great.
Well, you live in a real wonderland.
Yeah, it's nice. I'm 5 minutes away from the, you know, the country club and the mall and the plastic surgeons and all their clients. So I'm, you know, but I'm a world away from it. It's a 5-minute drive, but I'm out here in the country. I'm not that far away from that stuff if I want to go in there. But the reality is, I'm pretty happy here with the deer and the turkeys at the moment, and the horses and the cows behind them. So that's good anyway. But I digress. I wanted to get into this thing because it's really important. This is what happened. My older daughter, over the years, when I was, you know, growing up in the, you know, in the 60s and that type of thing, and being part of that group, as I got older and had my daughter later, and when she was a teenager, I used to like walking by her room because the music that she played was the music that I liked. that I had liked 20 years, whatever, 25 years, whatever it was before, number one. And number two, the posters that she had up on her wall were things like Elvis and this kind of stuff and so forth. So it was, I thought, gee, that's very cool of her to do that, and very easy for me. I didn't have any problem, because when I was a kid and playing rock and roll, apparently, turn that down. I'd walk by my daughter's room and go, hey, turn that up. That's cool. Anyway, she said a couple times, she said, gee, it must have been really cool for you being in that 60s era and being part of that anti-establishment. That was really cool. And I said, well, things aren't always what they seem. And I said, almost everybody that's lived through that would say that was an anti-establishment era. And that was what it's all about. And you can read any book on it. You can watch any of the movies. You can listen to the music. You can talk to everybody who was part of that generation. They'll tell you the same thing, except for this guy over here, Jones. He's not very smart. He'll tell you that wasn't the case at all. He'll tell you that it was the greatest pro-establishment move ever. And that's what I was trying to tell my daughter. I said, this move was created. It didn't just organically happen. Hippies didn't just grow out of the sand, They got created, and they were made anti-establishment, and they were given a lot of press for it. And the music was there, the whole thing. They were the history. Woodstock, one of the great historical events. And friends of mine who went there. And I said, you were I said, we were the dupes. I said, my era I was telling my daughter that you think was so cool. I said, we're the fools. We're the dupes. We were the useful idiots of that era. And I said, we never thought of ourselves as that. We thought of ourselves as just what you're saying. We were anti-establishment. We were this and that. I wasn't that much into that, but that era, I said, we were the dupes. We were the useful idiots. What did we do? She said, well, big deal. What did you do? What did you create? I said, we created liberals. We created liberals. That's what we were supposed to do. And the name liberal was given to us. We didn't choose it. If they were honest today, would liberals be called liberals if you were going to label them? In other words, hey, the guy is a basketball player. He's 7'2". Is he short or tall? He's tall. Let's not argue. Guy's tall. So I said, okay, well then, if you're going to name a political party and you're going to talk about today's Democrats, what would be a name other than Democrat? The Republicans, they're conservative. What are the Democrats? Well, they're liberal. I said, no, they're not. They're not liberal, and we've already proven that. They're not going to let me have a gun if I want a gun. They're not going to let me meet if they had control. So they're not liberal. Take that word out. It's not right. I'm liberal. I'm conservative and liberal. They're not liberal. What are they? Well, intolerant. In other words, they're not very tolerant of what you and I want to do. If you want to have a gun or I want to eat a hamburger, they're not very tolerant about that. They'd like to change that. So why don't we call them the intolerants? I said, well, there's a good reason for that. Nobody wants to be intolerant. That's not a good name. Liberal's a good name. Everybody can get behind it. That's why it came up. That's why they came up with it. They gave them something that they liked. And it's the same thing with politically correct. Politically correct is it correct? Is politically correct about being correct? Well, isn't it politically correct that keeps your nephew from speaking at the University of California in Berkeley about conservative things? Well, he wouldn't be able to do that because that's not politically correct. I said, no, it's not politically correct to stop him from having freedom. That's what's not politically correct. So politically correct is merely there to remove the freedom of speech. And by the way, it doesn't remove it for all, does it? The Democrats and the radicals do have freedom of speech, and it's encouraged at all universities, but the conservatives don't. So it removes it for part. And what does that do? It divides people, right? Remember the old divide and conquer? So you see this thing being put together. You see the the mentality behind this. I mean, these people behind this, I have respect for, not respect in the sense of respect because you don't want to respect evil, but I have respect for the fact that their brains are working, and they're working a lot better than the people on the other side, by the way. They know what to do and they know how to get what they want. There's a lie. Liberal, that's a lie. Politically correct, that's a lie. What do we have lately? I mean, they inject these words all the time. The news media, which is 90% owned by these people, gets on those words and they promote the words. What's the word that happened recently? Conspiracy theory, right? What's conspiracy theory?
Right.
It gives them an opportunity to say, whenever anybody brings up the truth, something that's true, and they point it out, and they go, that's a conspiracy theory. And that eliminates it right there. You know, it pretty much shuts it down, like politically correct. Well, that's not politically correct. Boom. For the moment, it shuts it down unless you've got somebody, you know, like you or like me who can walk and talk and chew gum at the same time, you know, where you can come up and say something and say, no, wait a minute, you got your facts wrong. You know, here's what's happening here. Now, they're not going to listen to you anyhow because this brainwashing thing has gone on for decades. Most people would say it started in the 60s. I said, no, it didn't. It started pre-television. They knew that with television, they would have the vehicle to do that. And the history on this is there, and it's clear to be read for anybody who wants to do it. But the point is, nobody wants to read anymore. Nobody wants to do these things because they get all your answers are there. Fox will tell you what the answer is. CNN will tell you. MSNBC will tell you what the answer is. You don't have to think. Stop thinking. Let us tell you. We'll tell you. Don't worry. We wouldn't lie to you. And the politicians are telling you the same thing, aren't they? You know, it's a conspiracy theory. Isn't it interesting that now we've got censorship? What's the comparison out there in today's world? Well, we know that we can compare things now with 1929 because that's the cycle. And if you want, that's a 90-year cycle. And if you don't believe that, and you want to go back another 90 years prior to that, where are you? You're at the Civil War, right? 1865. So, and if you want to go back another 19 years there, you know, you're back at the start of the country. So 3 cycles back, you have a revolution cycle. What happened? The American Revolution. What about now? Well, there's nothing like that going on now. Are you kidding me? We've got more discord now and more aggressiveness toward each other than we did during the Civil War. Oh, and by the way, that's a cycle in between these that we're talking about. And the one between that one and now, the Great Depression. You know, so this stuff is there. It's very factual, but they've done such a good job that when you are talking about these things that are historical, they're factual, you can lay these things down one step right after the other one very clearly, you won't get an audience to listen because the guys who plan this are smart. And they've taken these people and they've filled their heads with stuff and they feed it every day on your TV with things like liberal, politically correct, conspiracy theory, etc., on and on and on. I can dig up the other words, but they're out there. And what that does is you will key your mind to whatever that word is, and you'll focus on that and you'll drown out what somebody's trying to tell you. And sadly, what they're trying to tell you is beautiful stuff. It's history. It's evolution. It's seeing just what we've talked about before, a republic that morphs into a democracy, that morphs into a dictatorship. This country started as a republic back 3 cycles ago, followed by a revolution, following, you set up the country, you break away from Mother England, and then you have a revolution and you win that war. But you start out with a republic. And as Ben Franklin said, if you're good enough to keep it. And shortly thereafter, when politicians realize that they can gain votes by promising and making promises from the public treasury, when that happens, then you morph into a democracy, because they start to sell the majority idea. The idea is, hey, it's a democracy. I grew up in a democracy. Should have grown up in a republic, but I didn't. When I grew up, they were championing democracy, because the people who are doing the control know this. They're smart people. I love their mentality. If they weren't so evil, I want them to adopt me, because at least they're smart. They've allowed their minds to be. They've allowed this to happen to them. But what happens, though, is I grew up in a democracy, and the difference is very simple. With a republic, you get great people, great minds. You can name all the founding fathers. They were great minds. They were driven and motivated by control. Moving away from control. In other words, they were under control, under the king, and they were taxation without representation and every other type of control. And they moved away from that and created this wonderful document called the Constitution, along with the Bill of Rights, that gave you freedom and ensured your freedom. And that was the law of the land. So the difference between a republic is that it's ruled by a constitution and a Bill of Rights that were created by great minds who were motivated by freedom and moving away from control. And they wrote this based on the fact that they knew what they didn't want. First of all, they defined what they didn't want, and then with a vision of what they did want, they wrote one of the greatest documents in history. But as time goes on, and as politicians found out that they could take the public money and promise it back to the people and win votes and come back in office, they would do that. And how do you do that? Well, you have to get away from that Constitution, don't you? You have to sell them something that's not part of the Constitution. There's nothing about majority rule. Majority rule is like liberal. It sounds good, right?
It grinds to a halt when you run out of other people's money to spend.
Bingo. It's like, hey, wait a minute. Hey, majority rule, what could be wrong with that? Majority rule, we're the majority. I said, yeah. I said, let me tell you what's wrong. What happens when the majority is a mass of idiots? I'm sorry, but what happens when the majority's not very smart? What happens when the majority's corrupt? What happens when the majority's evil? Oh, we didn't think about that. We were just thinking about the majority. I said, well, you know who did think about it? The founding fathers thought about it, and that's why they wrote the Constitution. It takes care of all that. But by the time I was a young man and going through high school and stuff, we were a democracy, man. The republic was gone. They said, oh, you had the republic. It's only been lost in the last 20 years. I said, oh, come on. It was lost before me. The reality is the republic was lost as soon as you start talking about majority rule. And now, what's the next step? You go from republic to democracy. This is an evolution. This is no different from caterpillar to cocoon to butterfly. Why? Because that's the way it works. You don't go caterpillar, cocoon, Siamese cat. You go caterpillar, cocoon, butterfly. That's just the way it works. This one goes the same way. You go republic to democracy to dictatorship. And by the way, where are we in that dictatorship process? If you ask everybody out there in America, say, oh, we're a long way from dictatorship. I said, really? I said, I thought I was a long way from,
Dictators tend to surround themselves with a standing army.
The dictatorship, in my view, has already happened. I think we are no longer in democracy. We're in the early stages of dictatorship, and that may have been around for longer than you think. And people say that's crazy. I said, listen, if you want to judge a book by a cover, I said, sometimes that works in politics. If it walks like a duck, if it quacks like a duck, if it's got feathers and webbed feet and a bill, it's probably a duck. I don't know, right. But good chance that it's a duck. If you if what is different with the way our government has been acting in the past few decades than what would happen in a socialistic country? I'll tell you what, if you think about that comment and if you look at it and you're honest in your evaluation, you'll find that we are a lot more like the socialist country and been a lot more like it than we are of a republic. Or democracy is only a transitional form of government. You know, republics and dictatorships, I'm sorry, republics and dictatorships, they kind of stay until something changes them. But democracy is always transitional. You're transiting from republic to dictatorship. You just don't know it. So anyway, with that lovely thing and a band of turkeys and deer out the window, I'll let you go. But I appreciate.
As always, Garrett, we've enjoyed it very much. You always bring a certain panache, a certain flavor to the discussion, so we really enjoy it. I would like to talk with you over the weekend, so when you have some free time, give me a call.
Oh, by all means, yeah, let's do that this weekend for sure. Okay. It's been crazy busy times. I've had, as I mentioned, a couple of very close friends been in the hospital for over a month, and both of them are out now. So that's a really good thing, and I hope everybody who's not feeling well gets their things turned around. All right, so, brother. Well, thank you so much, Dwayne. It's always a pleasure.
God bless you.
You and I love to talk to your audience.
All right,
so,
talk to you soon. Thanks a lot.
Bye-bye.
Bye-bye. Okie doke. Okay, we obviously are way over our time, but here's where we stand on the S&P right now. Hey, show open here. First 30 minutes, we traded and closed below the BBC. We spiked it, we closed below it. Okay, the open of this candle right here, which was 39.1275. Okay, beautiful place to be short, down to the zone where we expect there to be good support. Well, price spiked the zone and it got right to the bullish cross where it found support. All of our traders know that when price returns to an area where there was a bullish cross that led to an extended move, that area will typically become good support. And when there's a bearish cross that leads to an extended move, when price returns to that area, it will most likely be good resistance. Okay. Now, Garrett showed you a lot of charts, a lot of different indicators. His way of understanding and viewing the markets is a very sophisticated approach to the markets. Our methodology, we don't hold a candle to that. See what I did? Pun, candle, right? Honestly, I'm not that smart, and I don't try to fool anybody and make them think I am. We're just real basic, okay? We're sitting at a weekly trading zone here. Now, on this last bounce up, we almost touched the BBC, but red and falling was resistance, right? We had price climbing, right? And so that sent us right back down to this area that we highlighted, okay? Right down to that CTA number. Remember, the CTA price ran up to the CTA number and reversed, and it dropped to the CTA number and reversed. Okay, so now we've got resistance right here because we've moved up. So we have resistance times 2. Weekly trading zone, red and falling. Oh, so we're going to short right here. No, because price is still at the zone. The zone is 3907/3908. We need price to move away from the zone to get into a trade. So what could happen from here? Well, price could, see, we just had a green candle, and 5 minutes ago we got a new candle, which is currently a doji. Okay, price could pop up to the BBC. If it does, we expect that to be good resistance. till proven otherwise, and then a leg back down to the zone and possibly points beyond. Okay, bounce, leg to the downside. Now, since sellers already have control, okay, print a red candle. As price comes down, we're going to come right back into the area represented by this bullish cross. Now, we've already bounced out of there. These are 30-minute candles. We bounced out of there once, we bounced out of there twice, we bounced out of there 3 times, we bounced out of there 4 times. Okay, so on this 5th move down, 1, 2, 3, 4, 5th move down. Will it be support again or not? We don't know. Nobody knows. No indicator, no oscillator, no crystal ball. God did not give man the ability to know the future with certainty. But with our strategy and our indicators, we can know with certainty what the next high probability move is. So as long as we're below red and falling, below the weekly zone, printing a red candle, we can anticipate nothing other than lower prices. We also have to anticipate that these lows are going to be support until proven otherwise. And so the alert that I put in the channel while Garrett was talking is exactly what I had put here. Okay, we need to take out this low, which is 3,900. Now, at the time I put this in the channel, we had not dropped to 3,900. Had we, I would have put it a little bit lower. Okay, but after 6,000, hang on, after 6,564 alerts, I've never gone back and changed an alert. But I will make you aware of what's called the too close rule. Okay, see, we came within 1 point of triggering. Okay, now had it triggered and bounced and it was a stop out, well, that's no big deal. It's, you know, just another trade. Now, because I'm not going to go back and change the official record in the alert channel, I'm telling you that there is such a thing called the too close rule. I never invoke it in the channel, but when it happens, I bring it to your attention. So what does that mean? All right, if price drops just 1 point lower, okay, I'm not really convinced. Remember, we want the market to convince us. So you could say, instead of entering at 38.99, I'm going to make my entry 38.97, and then everything else is identical. Okay, because price came too close to the entry to make me comfortable with that entry. But again, after 6,564 Logic 247 alerts, I've never gone back and changed an alert unless there's some obvious typo or something, and then either I clean it up or Valerie does. But no, that's what it was at the time I published, and so I stand by that. Again, the worst thing that could happen is price comes down and it triggers, and then it reverses and gets stopped out. It's just another trade. So I'm just giving you that heads up. So if you want to, you might have an order sitting right now in the DOM or on your chart if you trade off the chart. I'm just saying, if I had not already published alert number 6,564, I would publish it slightly differently, and the only thing I would change, instead of the entry being 99, the entry would be 97. This would be the initial target, second target, third target, fourth target, weekly zone, final trade 2 target. None of the rest of it changes. Okay, so it hasn't triggered yet, and so you have the ability to make your decision. Do you want to invoke the too close rule or not? Entirely up to you. Okay. All right, so we got to move quick because of the late hour. Let me get my CTAs back up here. If you didn't have a chance to grab a screenshot before and you still want to, please do. 5, 4, 3, 2, and 1. Okay. So let's jump to the Dow. Okay. Looks pretty similar, huh? That's because it is. It's the same chart. The Dow didn't pop up. Here we go. It still looks kind of similar. So anyway, the S&P, the Dow, the Russell, the NQ, the 4 major indices tend to move as a pack animals. Okay. Now there'll be times when you'll have 2 of them rising and 2 of them falling. Be careful. Even when you have 3 rising and 1 falling, or vice versa, be careful, okay? Because traditionally, historically, they travel together in the same direction. So if you've got, 2 above the BBC and 2 below, why don't you wait till they all 4 get on the same side? Even if it's split 3 and 1, why don't you just maybe exercise some patience? Not that you can't take a trade. It's your trading business. You trade whenever you want. So what's happening on the Dow? Price came down to the zone where it found support. That's what we expect. Okay. Now our bullish cross here was way down here. Okay. So buyers came in earlier than we expected. In fact, what this really is, because you see how this candle's still touching the zone? So this drop to the zone held. It held, it held, it held. We had 1 candle open and close below the zone. Now, if this low had been taken out, then we would have had a window of opportunity down to where we anticipate support, just like on the S&P. Okay, so if price takes out that low, we have a window of opportunity. And I believe there's an alert in the channel, 31,420 down to 31,400. 20 points, $5 a point, $100 per contract traded. Okay. If buyers continue to assert themselves, get above red and falling, get above this high, then we have a window of opportunity to the upside. Okay. I would probably want to even get above that high because there's enough room, because I want this to be the highest probability, lowest risk trade I can find. So on the long side, 31,530 up to 31,560. That's a 30-point move, $5 a point, $150 per contract traded. Now, trading can be as complicated and convoluted and difficult as you want to make it. Or it can be this simple. Okay? We know where resistance is. We know where support is. What does price do? Price trades from support to resistance, back to support, back to resistance, over and over, again and again, day after day, since the inception of the markets. Your weekly trading zones are fixed support and resistance. The indicators are dynamic support and resistance. The two fit together like a hand and a glove. Now, the purpose of the alerts, as I've explained, is to show you the window of opportunity that I see. And so as these windows trigger, you trade it in your demo account, in your simulator, and as you repeat that process again and again, because I don't ever want you to trade an alert just because it's an alert, because you don't learn anything from that. It might make you feel good because you put some green on the screen. This isn't about feeling good. This is about teaching you a life skill. This is about helping you to become self-sufficient as a trader, okay? So the more times you hear the sound, look at the alert, go to the chart, place the trade, you start to see these windows of opportunity yourself. That's our goal. That's our product, is to teach you how to find these windows of opportunity yourself. I don't need a lot of indicators and oscillators for that to happen. At the end of the day, we're really just kind of price action traders. But that's such an overused term, I don't even really like it anymore. We do have a couple of indicators on our screen because it makes it much simpler to see the window of opportunity, okay? Right here, you see that little wick? Price tried to move higher when this candle opened. There was a little bit of green, and the buyer slapped it down, okay? So we know there's resistance there. When this candle opened, it was green, and then buyer slapped it down. So we had a green candle that dropped in price back to the entry, to the open, and then as it traded below the open, it turned into a red candle. So we know there's resistance there. We know there's resistance there. So if price can get above that resistance, then we have an opportunity to be long or buy the market up until at least the next area where we know there is resistance. Can resistance pop up anytime, anywhere, for any reason? Yes. That's why when I show you the recap of the logic alerts, 20% of the time the alerts get stopped out because order flow changes. In this case, if we triggered to the upside from here to here, could something happen? Could the group mind just change like a school of fish turns left? Yes. And in fact, 20% of the time, on average, that does happen. You can never know what will happen next. You don't need to know what will happen next to make money in the market. What you do need is a definable edge. What you do need is to know it's a business based on probabilities. And with our simple strategy and indicators, you can know at a glance what the next high probability move is, with the understanding that 20% of the time it'll do something different. Something other than the next high probability move. Now, you can have all of that. One money, one price, lifetime memberships, $5,000. $49.97 to be exact. You go to this web address, eminifuturestrading.com, click the button. Valerie will spring into action. She'll send you out everything you need, from getting your charts and your indicators set up, to giving you access, complete, full, unfettered access to all the Telegram channels, the alert channels, the discussion channels, the weekly trading zone channels, everything. And you'll be ready to begin trading in your demo account Sunday night at 6 p.m. Eastern when the Globex markets open. We provide around-the-clock support. I know everybody's been members of different groups and had different gurus and learned different methodologies and different strategies. And sometimes they talk about mentoring. Sometimes they even say, private mentoring, personal mentoring, one-on-one mentoring. But what that often means is if you have an issue, a problem, or you don't understand something, you submit a support ticket. And then you get a response that tells you need to buy some other thing, and that, if you buy this module and watch these videos, then that'll fix whatever's, you don't understand. We don't do that. I mean, we have videos and stuff, but we provide real support, real people helping other real people. You come to our discussion group, you meet our traders, you talk with them, you talk with me, you ask a question, you get an answer. You can ask questions publicly, privately. Most of our traders who've been with us any length of time, because our strategy is so simple, if you have a question, they can probably answer for you as well as I can. Okay? If I'm not around, they'll try to. We are a community. We're a family. Okay? We have common goals, common bonds. Most of our traders, you'll never hear them talking about how they're going to kill the market, this year so that they can make X number of dollars so they can buy, some fancy home in Belize. Not that there's anything wrong with having a fancy home in Belize. What you hear them talking about, building an orphanage, feeding the hungry, clothing the naked, doing something to make the world a better place. Okay? That's the heart and the spirit of who we are. Again, nothing wrong with having a nice home, nothing wrong with having a nice car, 2 nice cars. Now, at one point in my life, I did find myself with multiple cars, and I realized I could only drive one at a time. I traded in my Mercedes 450 SL convertible. It was a classic, 74, for Vespa. Because I had a spiritual awakening, okay, beyond just returning to the God of Abraham, Isaac, Jacob, and my grandmother, but after my wife and I came out of our dark decades and began to, become church folk again, like we were when we were growing up. As you begin that walk, you have different, levels of enlightenment, and one for me was, since I was a kid, 8, 9 years old, my dream was to have a Mercedes 450 SL convertible. I just somehow knew deep down in my soul that if I owned that car, all would be right with the world. And by the grace of God, He allowed me to actually work hard, really, really, really hard, and to own that car of my dreams that I thought would make the world a perfect place. Well, I was pretty jazzed for a couple days, but a few days into ownership, I was standing at the car wash, hosing it off, and it hit me like a ton of bricks. This is just a car. Yeah, it's got the little emblem on the back and blah, blah. It's got the soft top, the hard top, But it's a car. It gets you from point A to point B. And I wasn't suddenly sad or depressed. I didn't feel empty with that realization. I felt free. The shackles of bondage fell. I was free. My desire for this material thing vaporized. And I stunned all of my employees by pulling up to work a couple days later, not in my little convertible, but on my Vespa. They thought I was joking. They go, "Where's the car, man?" I got rid of it, sold it. What? Well, where's your new car? You're looking at it. Come. They thought I lost my mind. But that company, we had a daily devotional every day. When my employees came back from lunch, they had 30 minutes on the clock. We called it God's time, where we sat around and talked about the things of God. We have 50 employees. And so they were able to watch me, leading by example is the best way anyone can lead. And so, not that my leadership was perfect by any stretch, but I did try to lead by example. And while it was a huge moment for me, a lot of the people who were working for me at the time, some of them in their 20s and their 30s were still struggling to just even own their first car, right? Or to own their first home. For some to get their first apartment. And I was there to support them and help them and encourage them every step of the way. But I think my actions served as some kind of an example for them to determine what was really important in life, what really mattered. You know, do I need, 3 gold chains hanging around my neck, or is one enough? I need a pair of $300 Air Jordan tennis shoes, or I don't know, will some Reeboks suffice? Again, I'm not here to judge anybody because you have a fast car, big house, pretty wife. No. That's not my point. My point is, at some point in your walk with God, you'll figure out when enough is enough. And that's when you really set yourself free, when the truth sets you free, because then your focus can become not on being blessed. I mean, who doesn't want to be blessed? We all want to be blessed. But why does God want to bless us? So we can sit around in a puddle of blessing? No. He blesses us so that we can be a blessing to others and teach them how to be a blessing to others, who will teach others how to be a blessing to others. That's the job of the body of Christ. That's what's called building God's kingdom. And to every one of you who is currently a member of the CFRN family, I'm so glad that you are a part of this family and that together we are building God's kingdom. Tomorrow's the memorial service for my best friend, Coney Orozco. Not only my friend, my pastor, also sort of a stand-in father, brother, friend. He helped pioneer the orphanage in Africa with my wife and I. First time we went, back in 2003, he went with us. Second time we went, he went with us. Then eventually he started his own place, a boys' home, right across the border in Kenya. So tomorrow is his memorial service. My other friend that I asked you guys to pray for, Pastor Floyd, they were going to disconnect the machines today. But we just got word his oxygen level has suddenly jumped up. And so they're not going to turn the machines off today. They want to wait and see if his condition continues to improve. So I thank you all for all your prayers for Coney and for his family, and for me. I ask you to pray for my daughter too. I won't go into that. And Floyd and his wife Cheryl, if you got an extra prayer, please pray it on their behalf. I really appreciate it. The rest of the markets, we could go through them all, but the Russell CTA was to be long 22.35, which is here. I tell you, the Russell had a explosive day to the upside. And I've probably mentioned that important prices, important areas are almost always tested. So the CTA long for the Russell is 22.35. Important prices, important areas, almost always tested. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So from 35, it made it up to 44, 9 points, $50 a point, $450 per contract traded. Why to stop there? Well, see this support right here? Came resistance. So we get back below the trigger. It gives us another 9 points. Back below the trigger. And it goes from 22.35 to 22.75 plus 40 points, $50 a point. That's a $2,000 per contract move. In queue. On the NQ last night, long 13,695, and we made it up to 729. That's over $600 per contract traded. The short side for the NQ is 13,560, right there, and we put in a low. We'll call it was like 25 points. $20 a point, $500 per contract traded. Crude oil, long above 61.10. Never saw that because that vertical line separates yesterday and today. So we never triggered on the long side, 61.10, and on the short side, 59.50. That triggered for the first time. $59.50. Okay, so CTA said considering short at or below $59.50. So what did price do? It triggered $59.50. It dropped right to the zone. $550 per contract traded. Now this zone was given out not yesterday, last Monday at 6:15 a.m. Eastern. When the zones are published, they're carved in stone for the entire week. So when price finds support, it goes and looks for resistance at the BBC. When price finds resistance, it goes and looks for support at the zone. Back to the BBC, back to the zone. 1, 2, 3 triggers. Okay, 500 plus bucks a piece per contract. If you've earned the right to trade 2 contracts, then it's grand. That moves a grand instead of 500. So 1, 2, 3, 4, 5. 5 triggers, 1 alert. Each one of those triggers worth at least $500 per contract traded. A little more. What was it again? It was $59.50. Well, just down to 59. It'll be 500. So it's 550 bucks. So 550, 550, 550, 550, 550. 1, 2, 3, 4. 5 triggers, 1 alert. Not unusual. Go back and look at previous daily afternoon broadcasts at youtube.com/CFRN. You can scroll back a day, a week, a month, a year, 2 years. You'll see us doing exactly the same thing, using the same language, the same indicators, the same strategy. Nothing's changed because the markets, the underlying principle upon which markets operate hasn't changed. And that's what our passport, everything that we do is based on the underlying principle upon which markets operate. The final market we'll look at, it's gold. CTA last night on gold was to be long above 1795, never got up there, or to be short below 1771, which was right there, down to the zone at 67/68. So 300 bucks, 300 bucks, 300 bucks, 300 bucks. So if you're still out there looking for some kind of way to make money in the markets and not get stopped out, you are on a heartbreaking mission, because what you're looking for doesn't exist. You need a teacher. You need to understand it's a business based on probabilities. You need a definable edge. You need a simple strategy that you can learn in a couple weeks. You need just some very simple, humble indicators that let you know what the market's trying to do. And you need support. And we provide that. Now, our alert channel opens Sunday night at 6 p.m. Eastern and stays open until Friday afternoon at 5 p.m. Eastern. But our discussion group, that's open 24/7, 365. I don't know of anyone else in this business that helps their members, clients, students, whatever label you want, around the clock. I don't know anybody else that provides unlimited one-on-one mentoring sessions with a real-life human being. There may be somebody out there, I just don't know of them. We make no wild, outlandish promises, no guaranteed success, no guaranteed rate of this or that. That's why we give you the trial, so that you can see what we do, how we do it, so that you can fully understand everything that is CFRN before you make the decision if you want to become a lifetime member or not. If you decide not, then you're always welcome to be a part of the audience. Come to this live broadcast every afternoon. I know many of you are coming off of your trial this week. And so it's now your turn to make your well-informed, intelligent decision as to what you want to do. Do you want to keep looking for something that doesn't exist? Do you want to keep falling for those false promises? Or are you serious? Do you really want to learn how to trade? See, you could just give your money to a money manager. You could just buy an ETF. Nothing wrong with that. Okay? But if you actually want to learn how to trade, then you're going to have to find somebody to teach you. Okay? And all the big names I know out there, not even the little names, even the unheard of names, they charge a lot more than we do. And they don't provide the things that we provide. So make your decision. I look forward to hearing from you. You can always reach me in Telegram. Last couple days, we've been talking about the truth of creation for the last 3 shows. We'll talk about it again today, number 4. It's our good word for the day. 1 Corinthians 15:39. All flesh is not the same, for there is one kind for humans, another for animals, another for birds, and another for fish. Ray Comfort writes about Psalm 49:20, where the Bible tells us that animals are created without understanding. We are made in God's image. We aren't merely a higher form of species on the evolutionary scale. As human beings, we are aware of our being. God is I am, and we know that we are. We have understanding that we exist. Among other unique characteristics, we have an innate ability to appreciate God's creation. What animal gazes with awe at the magnificence of the Grand Canyon? What animal obtains joy from the sounds of music or takes the time to form itself into an orchestra to create and harmonize music? I'm not knocking animals here. Okay? No animal's feelings were harmed in the preparing of this good word for the day. What animal among the beasts sets up court systems and apportions justice to its fellow creatures? We, you and I, are moral beings. While birds and other creatures have instincts to create nests, etc., we have the ability to uncover the hidden laws of electricity. We can utilize the law of aerodynamics to transport ourselves around the globe. We also have the God-given ability to appreciate the value of creation. We unearth the hidden treasures of gold and silver and diamonds and oil to make use of them for our benefit. And only humans have the unique capability to appreciate God for this incredible creation and to respond to His love. Yes, God created us, redeemed us, has a special purpose for us, and loves us so much that when we die, He wants to take us to heaven to live with Him forever. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.